but the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, everybody, live from the Bloomberg Interactive Brokers studio, streaming on YouTube. It is Friday, March 19th, 2021. My daughter's turning 18 today.
Wow, happy birthday.
It is a big day in our household. And I got to say, though, while I'm excited it's her birthday, I am so ready to wrap up this week.
You, me, and I hope, and I think everybody else listening.
And the whole world. Man, it's just been that kind of a week. I don't know whether it's because of the clock change, but all I can say is here we are on this Friday. We've got stocks actually kind of coming off their lows, tech coming back a little bit, yields settling down. And coming up, we're going to talk about a lot of things, including, talk about what a week it's been. It's actually been a couple of months, a year, a crazy one for Citigroup losing $500 million.
Yeah, this is just a must read. We're going to talk about all of that and more, including NFL and streaming, the huge rights yesterday. That was a big one.
Yeah, exactly. All right, so we got lots coming. So don't go anywhere. Get a good cup of coffee or just turn up the volume in your car, wherever you are. We got a lot coming up. Let's get you going, though, on this Friday with a check on the trading day. Here is Charlie Bell.
Happy Friday to you both. Here's what's going on. We've got the Dow lower, S&P, NASDAQ 100 index all advancing, as you mentioned, at or near session highs right now. That's where the S&P is. Let's begin there. Up 12, up 0.3%, 39.27. We've got the Dow down 102 now, lower by 0.3%. NASDAQ 100 index up 0.8%. NASDAQ Composite Index up 0.9%. And the Russell 2000 up by 1.1%. 10-year yield, what a week, 1.72%. Right now we've got gold up 0.4%, 17.31 the ounce. And crude rallying today, sharp contrast to yesterday's plunge, up 2.2% right now. WTI West Texas Intermediate crude 61.35 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. It is time now for the Market Drivers Report. And let's get to it. Let's set the Business Week agenda on this Friday. Dave Wilson with us, Stocks Editor at Bloomberg News on the remote access from New Jersey. How has this week felt for you, Dave Wilson?
A fair amount of back and forth, but not in the extreme by any means. Of course, if you want to talk about the week, you got to remember we really didn't get a St. Patrick's Day celebration this year.
I know, which can be a lot of fun, typically is a lot of fun for everybody, but it can also really wipe people out because there's a lot of revelry that goes on.
I like that word, revelry. I think it can mean different things to different people. That means different things to different people, Karen.
Exactly. All right, Dave. Revelry, I'm not quite sure that's how you could describe the markets, although on some days it felt that way.
Yeah, on some days. I mean, today at least you're looking at green with, say, the S&P 500. We can start there. And, I mean, 9 of the 11 main industry groups are higher. Really 8 because raw materials barely up at this point, but it's showing green at least. The exceptions, financial stocks with what's going on with interest rates being front and center, and the Federal Reserve's decision to kind of ratchet back an exemption for banks that they had put in a while ago. Industrial stocks also down. I mean, in terms of looking into the market, I mean, what jumps out is, well, really, you had the results late yesterday from FedEx and Nike. So you got FedEx shares higher, among the best performers on the day in the S&P 500, and Nike lower, one of the worst. But the steepest drop belongs to Visa, and the story there is the Justice Department taking a closer look at their debit card.
This looks like a big deal.
How they're handling transactions. Yeah.
This looks like a big deal.
Yeah, Dave. Look, what is the? We'll talk Visa in just a minute. I want to get your thoughts on the greater trading day in general, and basically the big difference between yesterday and today, because we're seeing yields retreat a little bit, and we're also seeing stocks move higher. But yesterday there was quite a sell-off. What's the big difference happening today?
Well, I don't know, Tim. Let me tell you, the biggest differences I see between yesterday and today, you have futures and options expiration. So, call it the quadruple witching if you like, even though stock futures, individual stock futures really no longer trade. So it's probably better called the triple witching. Nonetheless, whatever you want to call it, we had the burst of trading at the open, more so than even in December, the last time this came up. And then we'll get another burst at the close. And whether it sort of reaffirms the direction that stocks are going in, we'll see about that. But, one day or the next, I mean, not necessarily a whole lot of movement here, maybe a little bit less concerned that, interest rates are just going to keep going up and up because you look at the Treasury market, they've stalled out today. But, really it's more in the activity than anything else that sort of jumps out in terms of a distinction here.
You sound bored and tired, too. I'm just going to say that, Dave. I know you. I know when you've got a little extra pep in your step. But I think it's like we're all kind of exhausted by this. Listen, we had a Fed meeting this week, and the markets are like value versus growth. And it's also like, okay, you either, when it comes to interest rates, you think it's just kind of a normal, expected, natural kind of resetting of our interest rate expectations as the economy starts to get back on track after being shut down by the pandemic. So there's either you're in that camp, and so you don't think there's runaway inflation, and then there's the others who think, folks, it's getting out of control, and Jay Powell, you're going to miss something.
Yeah, you've definitely got both sides of that story, no question.
You guys aren't helping me today. I'm just telling you. I'm working.
I'm throwing that to Dave.
Yeah, another reason to kind of be run down or maybe not so peppy, you might say.
Worn out, right?
We're getting toward the end of a quarter. There's less than 2 weeks left. And so, we haven't really started to hear from a whole lot of companies about how they are doing this quarter. We know we can look out 3-4 weeks and we'll start seeing the actual results come in. But in the meantime, it's a market that's kind of left to other forces. And certainly, what's been happening in the bond market is kind of taken on that front and center role lately.
Yeah, exactly.
Okay, I promised we'd get back to Visa. I want to end with that, Dave.
He's like, are we done with rates?
The Department of Justice launching an antitrust investigation into Visa's practices regarding debit card transactions. You talked about the company's stock. It's taking a dive. Right now down about 4.87%. Department looking into the network's rules for routing transactions. How big of an issue is this for Visa?
It's an issue, and it's not a new one in a sense. It's all about, merchants maybe trying to save money by routing their transactions to cheaper networks. So, they can save a few bucks because it's a cost that, if you're a store owner, you have to absorb it. Now, this is not new in a sense that, the Federal Trade Commission in the last couple of years has looked at this area. And in fact, the Department of Justice sued last year to block a transaction. Visa was looking to buy this supplier of consumer data called Plaid for $5.3 billion. And the Justice Department didn't like that because they were concerned about potential competition down the line. And that deal ultimately was scrapped. So, it's a familiar area, debit card transactions, and it's also sort of a familiar cast of characters in the sense that the Justice Department is back looking at Visa.
Well, listen, it's constantly looking at entities that have become too big, and then who gets hurt ultimately are consumers. And this has to do with, retailers, places just being able to kind of route online transactions specifically to alternative networks, which can be cheaper ultimately and help out the merchant as well as consumers.
But it also comes down to the changing definition of antitrust and how the government is thinking about that. And we saw the appointment of two progressive antitrust officials, or are in the process of, I should say, being appointed, being vetted right now. And that could mean changes when it comes to tech policy.
Yeah, so something that we're going to certainly be, we talk about this a lot.
Yeah.
All right, Dave, you're going to be back a little bit later on. In the meantime, let's do the Bloomberg Business Week Bite of the Day.
The Bloomberg Business Bite of the Day is one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
I love this story. Today's number is 13. Facebook wants to get a whole new generation of kids mindlessly snapping their food by building a version of Instagram for children under the age of 13. It's exploring a parent-controlled system to help keep youngsters kind of in touch with their friends. Facebook did a similar thing with Messenger Kids, sparking concern after a flaw allowed some to speak to people not approved by their parents. Snapping their food? Is that an expression, or is that a typo?
I mean, Instagram originally was like criticized for people just taking pictures of their food.
Oh, okay.
Initially, and I think that it's evolved a little bit since. But as somebody tweeted about this, what could go wrong?
Kids, online, social, just look at the headlines, folks.
Yeah, and look, Facebook's products are for the most part for people who are over the age of 13. That's why that's the age that's important.
My daughter's not on Facebook. She's like...
Yeah, she's like too cool for it.
I'm not making any judgment. I'm just saying that's
She's
what the
too
kids
cool.
say. The kids are like, old people are on Facebook. All right, anyway, that is your Bloomberg Business Week Bite of the Day. Let's get to news.
Nancy Lyons is in D.C. Hey, Nance.
Hey, Tim. The Center for Disease Control now says it's okay for kids in elementary school to sit only 3 feet apart in class if they wear masks. But adults should still remain 6 feet away. Bloomberg's Irv Chapman has the update.
CDC Director Rochelle Walensky says the revised recommendation is based on studies in several states.
The evidence shows that the risk of COVID-19 transmission among younger children is much lower than it is among teenagers and adults. When young children are masked, the distance of 3 feet is in fact safe. For adults and for older children, we're continuing with the 6-foot guidance.
Dr. Walensky said 3 feet distancing is doable in middle and high schools in communities with a low level of disease, and 6 feet should remain the standard in common areas of all schools. In Washington, Irv Chapman, Bloomberg Radio.
President Biden and Vice President Harris are in Atlanta this afternoon touring the Centers for Disease Control and then meeting with Asian American leaders to offer support after the shooting deaths of 8 people at area spas. 6 of the victims were Asian women. The judge in the George Floyd murder case is rejecting a defense request to move the trial.
I do not think that that would give the defendant any kind of a fair trial beyond what we are doing here today. I don't think there's any place in the state of Minnesota that has not been subjected to extreme amounts of publicity on this case.
Judge Peter Cahill is also rejecting a request to delay proceedings, saying a delay would also do nothing to stem the problem of pretrial publicity. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
There are so many different things, interesting things that are going on around our world right now. And this one, definitely on my radar. Tesla shares, by the way, just down about 0.7% as we speak. And the story involves Tesla.
I could have made such a bad joke. Okay, are you ready? I'm going to make it, okay?
Come on, let's just be all in.
You said it's on your radar. I was going to say it's on your LiDAR. Self-driving technology, we're talking about it. Nobody's laughing. I don't hear anybody laughing.
Come on, can you just hit the laugh button?
Do
Come
we
on,
get
guys,
that?
give us, Chris,
So
give
LiDAR,
us something.
Okay, but this is connected to the story because LiDAR
Yes.
is used in self-driving cars. Elon Musk, not so much.
Tim's working that whiteboard right now.
I really am. You can see on YouTube.
Works
You can
so
watch
well on
YouTube.
radio. So Tesla cars have been banned from Chinese military complexes and housing compounds because of concerns about sensitive data being collected by cameras built into the vehicles, hence LiDAR.
Exactly. Thank you.
You're welcome.
Thank you. Bringing
Tying
it all
it
back.
up for you.
The issue is the order issued by the military advises Tesla owners to park their cars outside of military property. That's according to people familiar with the directive who asked not to be identified because information is private. The ban has been relayed to residents of military housing this week, and it was triggered by concerns that the world's biggest maker of electric cars is collecting sensitive data using the car's built-in cameras.
Thank you, hacksters.
Hacktivists. Yeah, I think also though it's a story about the way that there are so many cameras in our lives.
Totally.
And also the story about who's building what technology and where that technology is then going.
Well,
because you could easily say that this similar issue was brought up with Huawei technology on U.S. military bases, right?
And it's kind of funny that it's happening as U.S. and Chinese high diplomats, Secretary of State for the U.S., Antony Blinken, like they're all meeting, and it's not been friendly negotiating, the back and forth between the two sides. So I feel like there are so many layers to this story. But Tesla, China is an important market. They just built a new big facility. So you do wonder what the business implications might be.
Yeah, and they have a lot of competitors in China as well. Even though it is such an important market to Tesla, there is a ton of competition, literally hundreds of companies competing in the electric vehicle market there.
It's a really good point. We tied it up. We did it well.
We did it.
Score. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got the Dow lower, S&P, NASDAQ, both advancing right now. NASDAQ 100 index up by just about 0.6%. NASDAQ Composite Index up by 0.7%. NASDAQ up 92, rebounding from yesterday's steep loss. S&P up 5, a gain of 0.1%. The Dow's been negative all session long, lower now by 147 points off session lows, but still down by about 0.45%. 10-year yield 1.71%. We've got gold up 0.4%, $17.43 the ounce, and West Texas Intermediate crude rebounding by 2% today, $61.25 a barrel. Stocks higher, Treasury yields retreating from the highs of the day as investors weigh the risk of inflation with economic growth accelerating. So again, recapping, S&P paring its weekly losses up now by 0.1%. 10-year yield 1.72%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So many headlines, including several from the CDC saying schools can allow social distancing of 3 feet rather than 6. Currently, being students in between students in classrooms. This is a big deal.
It is, but only in classrooms. When they're
Correct.
eating lunch, still 6 feet apart.
Right. Okay, but we're making steps going forward.
Right.
But I have to say, I look at some of the headlines across over in Europe. Also, if you take a look at some of the states around the country, we're continuing to see cases pile up. So I feel like we just forward, backward, forward, backward. So let's get into it. We love talking with him. Dr. Ian Lustbader back with us, clinical professor of medicine at NYU Langone. He is with us on the phone in New York City. How are you?
Doing very well. Thank you. Happy Friday, Carol and Tim. Hope you guys are doing well.
Has it been an exhausting week? See, I can't even speak, Ian. It has been just a crazy week. How's your week been?
Totally. And one of the topics that I'd like to put out there, perhaps over the next few weeks, is talking about all the stress around COVID, whether it's home isolation, the emotional, physical, economic stresses, and whether you're a healthcare provider, whether you're at home. And I think we're seeing this on a global level, whether it's volatile markets, whether it's fighting about the Royals or Republican or Democrat, right, left. I think we're seeing sort of an increase of global tension. And I'd like to talk about some ways that we can address that and perhaps bridge conflict, identifying conflict, and how to resolve it.
First of all,
before that, how about the CDC guidelines?
I know. Well, first of all, I love that you mentioned the Royals because it all factors in, but we'll get to that. Well, wait, where should we go? Let's talk CDC first because I know our audience is just trying to figure out, how does my world start to open up or how do I do things? How do you see it? Are those important to you? Do you think that's a pretty significant step by the CDC?
Yes. A lot of guidelines, of course, try to be based on scientific data, in other words, studies and so forth. And we do have studies that do show 3 feet is reasonable, but a lot of the decisions are often based on practical considerations. We certainly know that if someone's infected and coughs without a mask or sneezes, those droplets may go out 10 or more feet. But we also know that school-age kids really overall have a very good tolerance for COVID with very little serious illness, and that kids really need to be in school. We have to have kids in school to maintain academic success. Social skills are very important that are lost when you're on home isolation. And parents also need the kids to be in school to reduce stress on the parents. So I think we're moving in an intelligent way. If teachers and school staff get vaccinated, there's really no excuse for not returning back to a normal school schedule, with some prudence. 3 feet makes the classroom very reasonable.
Yeah.
We're watching this play out in real time. Right now, we're watching science happen in real time, and the CDC change guidance in real time. One term that often comes ahead of announcements from the CDC is the term long-awaited, right? We've been waiting for these things from the CDC. It happened a couple weeks ago when we got new guidance on what vaccinated people can do. What do you still want to see from the CDC when it comes to guidance? Like what needs to be clear to the American people?
Well, I think it's important to, for the time being, even though I think the summer and spring will bring a totally different environment, I think for the time being, we do need to maintain masks. We do need to have some social distance. But people who are vaccinated really should be able to get together in groups and feel safe. You know, whether you're on planes and need to show kind of a COVID passport, I'm a big believer in that because we do know that these vaccines provide 95% safety, and really we have not found many people who've had the vaccine have any sort of serious illness. So it certainly reduces serious illness and hospitalizations. And I think we need to reward people who do the vaccine by saying, look, you have a little bit more freedom, whether that's in restaurants or elsewhere. So I think we're moving towards that. And I think even though there's a lot of vaccine hesitancy, the more people who get vaccinated, the more comfortable other people will feel to get those vaccines as well.
Right, but a reminder that even if you get the vaccine, you still have to wear a mask, right? Because you can still be a carrier. I'm thinking of the exchange between Dr. Fauci and
Rand Paul.
Yeah, and Rand Paul.
Right, and so that is it's an interesting debate. We do find a few number of people who've been vaccinated will harbor some virus when you swab them. How infectious that isn't really clear. In other words, certainly the person who's been vaccinated isn't clinically ill. There may be some live virus in there. How easily that's transmitted is also unclear. So for the time being, it is very reasonable, even if you've been vaccinated, to wear a mask to decrease potential transmission. The reality is that is not, it's not clinically significant. We're not seeing a lot of people who've been vaccinated really infecting other people. So I think Fauci raises a point, which is until we know better, until more people get vaccinated, let's all wear masks. I think it also is a good sort of social statement. But the reality is if you've been vaccinated, your odds of transmitting it to someone else are really quite low.
Dr. Lustbader, in just 30 seconds, I want to bring in this kind of alarming stat that I saw. Washington Post Kaiser Family Foundation found that barely half of frontline healthcare workers, 52% said they had received at least their first vaccine dose by the time they were surveyed. More than 4 in 10 have not been vaccinated. Is that something you're seeing at NYU?
I think it's a lot less at NYU, but you raise a key point. There's a lot of vaccine hesitancy in the country, which we need to address. And even amongst healthcare workers, there's some vaccine hesitancy, much less among doctors, and it corresponds to some degree to educational level. We can talk more about it.
All right, we will do that. And I want to get into the mental health issues because we actually have an upcoming Bloomberg event that's tackling that subject in just a couple of weeks or so. We're going to get back to Ian Lustbader. He's clinical professor of medicine at NYU Langone on the phone in New York City. TGIF, everyone, but we've got lots more to come on this Friday. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. Coming up, we're going to continue with Dr. Ian Lustbader over at NYU Langone. We're going to get into what he has to say about, home isolation, the stress it's creating, and how that can, really manifest itself into chronic stress. It's important.
It's important. He gave us a little preview of it, and it's the idea that this is just leading to tension, not just, for us, but really around the world, like a macro idea. It's really interesting.
All right, we'll get to that in just a moment. Let's get back, though, to your top business stories. Another check on that trading day. Here is Charlie Pellet.
Thank you very much. Do want to begin with a developing story. Facebook services, including its main social network, Instagram and WhatsApp, are down for some users. Now, this is according to Down Detector. It's a website that tracks outages. Those issues started just after 1 p.m. New York time. Down Detector shows there have been more than 100,000 reports of service interruptions for Instagram alone. Facebook shares, parent of Instagram, up now by 4.1%. Stocks higher, Treasury yields retreating from the highest levels of the day as investors weigh the risk of inflation with economic growth accelerating. S&P 500 paring its weekly losses. Lenders weighing on the Dow Jones Industrial Average after the Federal Reserve let a capital break for big banks expire. S&P 500 index up 8 now. That is a gain of about 0.2%. We've got the Dow Jones Industrial Average down 130, down 0.4. NASDAQ up 108, a gain of 0.8%. NASDAQ 100 index up by 0.7%. 10-year yield 1.72%. Gold is up 0.4%, $17.43 the ounce. And West Texas Intermediate crude up 2.3%, $61.39 a barrel. A dozen states are expanding access to COVID vaccinations earlier than planned for every adult, accelerating the biggest such campaign in the country's history, and making long strides toward President Biden's May 1st deadline for eligibility. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
It really does seem like some of the estimates are going really high right now in terms of what can be produced. There's cooperation between pharmaceutical companies to make more vaccine. Production scale-up is increasing at a phenomenal rate. And so we're seeing this transition now to these mass vaccinations in the general population, which, if done effectively, can really tremendously increase the number of vaccinations we can do a day. But it's been a supply issue up until now. That seems to not be the issue in the next couple of weeks.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track, Pfizer shares, they are down 0.4%. BioNTech up 3.3%. AstraZeneca shares down 0.2%. Moderna up by 0.4%. Johnson & Johnson up less than 0.1%. Recapping stocks mixed, S&P higher, up 9, a gain of 0.2%. 10-year yield 1.72%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
It certainly is. Thank you so much, Charlie Pellet. I want to get right back to Dr. Ian Lustbader, Clinical Associate Professor of Medicine at NYU Langone Medical Center, joining us on the phone from New York City. It has been a tough year.
Yeah.
You can say that again, right?
Yeah, several times over. No, it's been very stressful on so many different levels. And I think what I will say, silver lining, is I think we were all paying a lot more attention to mental wellness and mental health, and it's something we weren't doing before.
Yeah, I'm wondering, Dr. Lustbader, how a year of home isolation has created stress, not just, I think, it obviously has created stress for people and their own interpersonal relationships, but you referred to this in more like a global scale. Take us into it.
100%, Tim. And I think what we're seeing on individual levels with patients, whether you see them in the office or whether you're doing video visits, we have to acknowledge the pandemic really triggered an array of issues: emotional, physical, economic. Everyone knows of either an illness or a death of a loved one, isolation, unemployment, the stress of working at home with kids, being a caregiver, sometimes having to make difficult medical decisions. And some studies show that over 35% of respondents have noted an increase in anxiety and depression, and even a higher number with some physical symptoms like headache, fatigue, and anxiety. And to me, it seems that this is really manifesting in a global elevation of stress and anxiety, whether we see it at the Capitol riots or whether we see more polarization with Democrats and Republicans. And I think what we need to try and first do is acknowledge that conflict can exist, whether it's a couple at home on isolation, and that there are ways to deal with it. And I think we need to talk about ways to do that. Certainly in school, we do not learn how to resolve conflicts, and there are specific skill sets that kids should learn, and adults certainly should learn, to try to bridge some of those conflicts. And I think we don't even see it in the halls of Congress.
Well, we certainly don't see it there.
Right.
Well, what would you suggest? Because I do really feel like people need some guidance on this.
Absolutely. So the first thing, we have to say is humans by nature have some conflict. It happens, whether it's in the home or as a result of other stresses. And we really define conflict as, or what some people define it as conflict exists when a person has a need of another and that need is not being met. So that need that you have of another person can agree to be met, or it can be negotiated, or there are various ways to respond to it. And you often see this. For example, there are 5 ways typically that are talked about. Competing, where people say my way is right, your way is wrong, and it's really a power struggle. Collaborating, where people try and work together. Compromising is one approach. Some people avoid it; they just won't negotiate or discuss. And accommodation, where often that's a power struggle, where people say I can't get what I want, I'm going to accommodate. But we need to take an approach, schedule time, find comfortable space, try and diffuse the situation, really listen to the other person or the other party, validate their point of view, repeat the other's point of view, try and find some common ground, and then go from there. This is what negotiators try and do. So I think we need to think about, read about, and just identify in ourselves that we may feel more stressed and work with whoever we're dealing with, whether it's at the job or at home, or family members who have different political points of view or different points of view about masks, whatever it may be. Let's try and find ways to find common ground and think about those conflict resolution skills of listening, compromising, accommodating.
It's a great point as we head into the weekend. And so we're going to leave it on that note. That is just really good advice. Hey, Ian, thank you so much. Dr. Ian Lustbader, Clinical Associate Professor of Medicine at NYU Langone Medical Center, on the phone in New York. On March 24th, actually, we have a Bloomberg Live event coming up. It's Mental Health and the Economy. I'm going to be hosting, and we're talking with the CEO of Accenture North America, but we're going to be talking about what different companies are now doing as a result of what they've learned in the last year.
There are a lot of companies thinking about this. I mean, think about what we learned from Goldman Sachs survey earlier this week about the associates.
Yeah, exactly. Like too much pressure, too much work, or just too much stress. We'll continue this conversation, but right now, let's get to World and National News and Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Biden and Vice President Harris are in Atlanta visiting the CDC on the day the country hits the 100 million mark for vaccinations. But their trip will then shift away from the pandemic to consoling a city recovering from a string of deadly shootings in which 6 of the 8 victims were Asian women. Biden and Harris will meet with Asian American leaders this afternoon to discuss violence against the Asian community. Next week, the Biden administration will focus on educators and is holding a summit so that schools can share best practices for returning kids to the classroom. Bloomberg's Amy Morris has more from Washington.
The Biden administration is expanding coronavirus testing for teachers, staff, and students, and holding a summit to ensure schools are able to reopen this spring. That summit, set for Wednesday, is supposed to give education leaders, teachers, and students an opportunity to share their experiences in reopening schools. Education Secretary Miguel Cardona expects that as more vaccines roll out, schools will be able to fully reopen in the fall. But he concedes nobody knows what normal will look like. In Washington, I'm Amy Morris, Bloomberg Radio.
Well, today the CDC offered new guidance for schools, saying spacing between students should now be 3 feet, not 6. An annual report on happiness around the world suggests the pandemic has not crushed people's optimism about the future. After a year of loneliness, illness, and death, European countries occupy 9 of the top 10 spots on the World Happiness Report, with Finland taking the top spot. The U.S. slipped from 18th to 19th place. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, so there's a story in Bloomberg Business Week that caught our attention, and it talks about business schools, which is something that's kind of a marquee topic for the magazine. They do their annual surveys and cover what's going on at the MBA programs around the world. Well, this story in particular, Tim, talks about foreign students in particular coming to business school, students which slowed down as a result of the pushback that we saw during the Trump administration, really against non-U.S. citizens.
Yeah, so I actually started business school in 2016, and I was in business school when Trump was elected. And one of the most surprising things to me about business school was the international component of it. I went to Columbia here in New York, and certainly New York City is an international city. It attracts an international students, and in the city it attracts international tourists. But the school was filled with international students. And I didn't see it anecdotally change between my first and second years, but the data show that it actually did. And the idea of this America First rhetoric that we saw during the Trump administration, not just that, but I think also tension with China as well, really put off a lot of people coming to U.S. business schools. The flip side of that, though, was that these students from around the world, they ended up going to other programs outside of the United States. And now the U.S. is saying, hey, we are ready for you again, because international students are so important for these universities.
Because they tend to pay full fare.
Exactly.
Yeah, they they don't need any kind of financial assistance or anything. And what's interesting too, though, you talk about the tensions between the United States and China, specifically Chinese students who would prefer to come to the U.S. are hedging their bets right now by also applying to Canadian and UK schools. This is coming from John Quelch. He's the dean of Herbert School. So this is another MBA program in Miami. So, yeah, I mean, listen, the tensions still exist, and so you do wonder if that slows down. But for these schools, and especially the financial bottom line, this can be a game changer.
Look, it's also really enriching for the students to have the international exposure. I said it was surprising. It wasn't surprising. Like, I knew it was coming. It was one of the most enriching parts of being in school. It was with people from all over the world.
James Gorman of Morgan Stanley said that when we did our broadcast up at Columbia. This is
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. S&P 500 Index pairing its weekly losses, looking at a gain right now of 10 points, up by about 0.3%. Stocks are higher. Treasury yields retreating from the highs of the day as investors weigh the risk of inflation with economic growth accelerating. The S&P, as I mentioned, up 0.3%, but the Dow lower by 115 points, down by about 0.3%. A rally for technology today. The Nasdaq 100 Index up 0.7%. Nasdaq Composite Index up 0.8%. Nasdaq is advancing by 107 points. Russell 2000 up 0.7%. 10-year yield 1.72%. Gold is up 0.4%, $17.44 the ounce. West Texas Intermediate crude up 2.6%, $61.54 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. March is Women's History Month, and Bloomberg Radio is looking back at some of the women who played a vital role in American history. Here with more is Bloomberg's Renita Young.
On this day in women's history in 1954, Jill Abramson, the first female executive editor of the New York Times, is born. The New York native graduated magna cum laude from Harvard in 1976. Later that year, she got her first journalism job covering the presidential election for Time magazine. Abramson went on to have a successful stint at the Wall Street Journal. Then in 1997, the New York Times hired Abramson as enterprise editor, and she rose through the ranks quickly, first promoted to Washington editor, then Washington bureau chief in 2000. In 2003, Abramson came back to New York as managing editor and celebrated that return by having an image of a New York subway token tattooed on her shoulder. She was named executive editor of the New York Times in September 2011, but less than 3 years later, in May 2014, she was abruptly ousted from her post over a management issue in the newsroom. That's today in women's history. I'm Renita Young, Bloomberg Radio.
All right, Renita, thank you so much. So I got to say, yeah, this one definitely hurt and still has many of us scratching our heads as to how it could actually happen.
I mean, we all make mistakes at work, Carol.
Yeah, and occasionally
We
it's
all
like,
make mistakes.
Okay, not a big deal. This one cost Citigroup, though, $500 million.
Yeah, that's a big deal.
That's a big deal. That affects the balance sheet. All right, so here with that story, that's in the current issue of the magazine. It's on newsstands, online, and on the Bloomberg. The magazine is. It's also among our most read stories. Let's head to Bloomberg News corporate finance reporter Davide Ciliezzo. He is in our New York City bureau. Davide, great story. And I have to say, Tim and I, when we saw it, we're like, I'm still trying to understand exactly what happened at Citigroup. So lay it out for all of us, because this is a big deal.
Yes, thanks for having me. Yeah, it is a big deal and it is a big mistake, but there is more than just human error to this story. Essentially, Citi made a wire of almost $1 billion. It was $900 million that it was not supposed to make. That's the amount that left the bank. Then, luckily, some of the people who received the money returned it, and so they're out only for about $500 million right now. But what's interesting about this, it's the story about the technology that Citi uses for these kind of wires, which is outdated. It was not able to complete the precise transaction that they were trying to accomplish. And then it's a story about the people on the other side, funds that had been up in arms against Citigroup and the company whose loans Citigroup was administering, which is Revlon, and who did not want to return the money.
So let's talk about the technology here.
Can I just say, like, if by mistake Citigroup, like, all of a sudden wires me some money that maybe it wasn't supposed to,
what are you going to do?
I'm going to have to give it back. So how come, like, this is what I don't understand.
Yes, so the funds that are refusing to give the money actually were owed money by Revlon. Revlon, the cosmetics giant, they they were in a bit of trouble. They were trying to refinance debt, roll over maturities, and there had been some tensions with some of their existing creditors. What Citi was supposed to do was just to pay interest on the loan. They accidentally wired the entire principal amount. So the funds who got the money the next morning said, well, actually, you're in trouble, and we are supposed to receive this money at the end of the day. I'm just not going to give it back. And a judge in federal court in Manhattan sided with those funds.
So what's the technology angle here? What is the tech that Citi's using, and how are they going to change it?
Yes, the technology. I mean, if you look, one of the screenshots was actually disclosed as part of the court proceedings, and you can see it looks like, the early days of Windows, really. And the interface was not intuitive at all. And obviously the people, there's 3 employees in question, 2 were contractors, and 1 is a senior manager for Citigroup in Delaware, who were tasked with completing this wire. Obviously are supposed to know how to use it, and there is a manual that they're supposed to look at. But boy, looking at it, it just doesn't look intuitive at all. And they essentially forgot to check 2 boxes, and that's all it took.
So are they going to change that? Do we know if they're going to start doing this differently so this doesn't happen again? I mean, what safeguards are going to be put in place as a result of this huge blunder?
Yeah, we don't know yet if they're going to change software or presumably they'll put some more safeguards in place. This was already a process that required 3 people. It's what they described in court as a 6I process to authorize the transfers. Also, this transfer was not just your plain vanilla interest payment. So there were a few different reasons why this became so problematic. But yeah, I mean, it's without question that this highlighted an issue that you hear about a lot across Wall Street of outdated technology, and definitely you could argue there is a need for a few upgrades there.
I still have questions about the transaction, but I want to stick with technology for a moment because I thought, we've been hearing from a lot of big banks, Wall Street firms for years, for decades, that, one of their number 1 CapEx items is technology, right? And making sure systems are secure, that they work effectively. Was that not the case?
I don't know the specifics, but if you ask me, that system did not look like something that was put in place fairly recently.
Yeah, no, it's just kind of interesting, right? Because I do feel like the story we hear, and we know they're spending a lot on cybersecurity, but
Right.
but maybe systems not so much.
And you would think that the cybersecurity
would go hand in hand,
would go
right?
hand in hand with the technology that they're using. But obviously that's not the case, as Davide's reported.
Yeah, exactly.
Yeah, and it's equally important. There's a security and regulatory angle to this too. They had to do quite some explaining in front of regulators about what happened and how exactly did they miss this.
So as you write there, the consequences are more than just losing hundreds of millions of dollars, right? This is about burning bridges, and it's about reputational risk as well, right?
It is about reputational risk for sure. It has led to this controversy, which has had deeper ramifications across the markets. So because the funds did not return the money, now Citi is excluding those same firms from some of their debt deals, from some of their trading activity. They're refusing to help them arrange CLOs and a few other things. So they're kind of burning bridges with those firms. The other dimension to this has to do with a trend that it's been a few years, I guess, in the making, and that people complain about a lot in the credit markets, which is the deterioration of lending standards. And this is something that some of the creditor firms would blame on the banks, or partly on the banks, as having, participated in this trend. And we're seeing that the consequences of that today.
That aspect of it, I think, is really interesting because, these other companies or creditors, they were worried about Revlon going into bankruptcy. And I know there's that aspect of Revlon of Citigroup helping Revlon get a new credit line. There's a lot of pieces to this and kind of the relationships. And you can see maybe why these institutions were like, we're not giving back the money because we're uncomfortable with some stuff here.
Yeah. But it's just such a big amount of money that it's still shocking to me.
Yeah, exactly, and especially when it feels like it was just a case of checking the wrong box.
Two check boxes, or lack thereof.
Or lack thereof.
Yeah.
It's in the magazine. David Chiliuzzo, thank you so much. Davide Chiliuzzo, corporate finance reporter at Bloomberg News. He's here in our bureau. Check it out in the new issue of Bloomberg Business Week magazine.
For those of you listening in New York, D.C., and San Francisco, or watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is next.
invested.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Friday, March 19th, on track right now for a losing week for the S&P 500 index. Stocks are advancing today. We have got the S&P up by 14 now. That is a gain of about 0.4%. Stocks higher. Treasury yields retreating from the highest levels of the day as investors weigh the risk of inflation with economic growth accelerating. Right now, NASDAQ is up 118 points, up 0.9%. NASDAQ 100 index up 0.8. Russell 2000 up by 0.7%. The Dow remains lower, down 73 points, well off session lows, down now by about 0.2%. 10-year yield 1.72%. Gold is up 0.4%, 17.43 the ounce. And West Texas Intermediate crude up 2.5%. WTI 61.52 a barrel. Facebook providing an update on that outage. Facebook Gaming says service has been restored. WhatsApp also says it is back. Spring is in the air, and with it, so are the hopes of airlines as passengers become more confident in a return to the skies amid vaccine rollouts and continued reopenings. Helene Becker is a senior airline analyst at Cowen & Company, and she was interviewed this morning on Bloomberg Television and Radio.
Over the past week, we've regularly seen more than 1 million people a day pass through TSA, and we thought that would be the case till about mid-May, and then around Memorial Day weekend, we think there will be a jailbreak, and we'll see regularly between 1.1 and 1.5 million people a day. And frankly, we think that's pretty close to pre-pandemic levels in domestic traffic.
And among some of the big U.S. airlines, UAL lower by 0.1%, American up 0.3%, Delta down 0.2%, Southwest up by 0.4%. After earnings, FedEx up 5.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So a story on our radar this Friday. Man, we actually talked about it yesterday.
Yeah, it broke yesterday. And look, some of the details had been reported, but I think the details came as a surprise to a lot of people watching the media industry and sports closely.
Yeah, listen, the NFL signing a series of long-term deals, TV deals, valued at an estimated $105 billion, I think it was. Yes, billion, that's a lot of money, including a historic contract giving Amazon exclusive rights to broadcasting Thursday night games. It is a first for a streaming company. So let's get into it with, and great to be talking again with Tuna Amobi. He's media industry analyst at CFRA Research. He is with us on the phone in New Jersey. Hey, Tuna, so great to have you here with Tim and myself. How are you?
I'm fine. Carol, good afternoon, and thanks for having me again.
Yeah, it's been a while. So listen, this is a blockbuster story. How do you see it?
You know, I think Disney has to be one of the clear winners of this deal that we just, saw. It's as blockbuster as it gets when you talk about media rights deals. So Disney has been able now to lock in these rights for a fairly long period of time, and now getting much more expansive rights, across its linear and traditional platforms. ABC is now back in business in terms of Super Bowl rotation, And of all of the networks, I think Disney has the most manageable terms of increase from the last deal. We calculate approximately 30% increase from the last cycle, whereas the other networks almost double their rights fees. So I think Disney clearly one of the winners here.
But Disney's not the biggest winner, right? I mean, isn't Amazon a big winner with this? Because Disney still has some of those legacy media assets that have come under pressure in recent years. Even though Disney has done very well over the last year, you know, it has so many different business segments, it still does have ESPN. And as more and more people cut the cord and move away from traditional cable and satellite pay TV, that's an issue.
Right. Well, there's no question that this deal is going to accelerate the cord cutting, and now consumers being able to pick and choose their sports packages across the various streaming offerings. You know, you mentioned Amazon. I would also say Amazon has taken a giant leap in making itself much more compelling by locking in the exclusive streaming rights for Thursday night package. But there's not going to be just one winner here. And remember, Amazon is paying about $1 billion per year now, you know, almost 10 times what they were paying in the last deal. Granted, they're able to secure much more expensive rights. But when you think about, you know, the potential winners here, you have to keep in mind that those are going to be companies that are able to mitigate the decline in the traditional bundle, which you alluded to, which is an ongoing phenomenon, and use the streaming business to begin to offset that. I think that's where we see Disney doing a pretty good job. You've seen some of the numbers from ESPN Plus,
right.
And that has been gaining some traction of late.
And my understanding is right, and I think you said this, you know, Disney's paying the lowest increase from the previous deal to the new one, and right, and they also got, as you said, you know, some of the other rights. And Monday Night Football, I mean, that is a powerful night to have.
Indeed, Carol, that has always been one of the highest rated, you know, telecasts in the entire television dial.
Right.
And remember, football is really the gift that keeps on giving. And whilst the ratings have been down, you know, with the pandemic, I mean, there's no question in the minds of the networks that really there's no better option out there in terms of aggregating mass audiences than the NFL. It's as big as it gets, and that's why you see them kind of falling over themselves really to lock in these rights.
Tuna, you know, what's interesting, and you talk about what Amazon's paying, you know, it depends what they ultimately get for it, because they don't have commercials like traditional broadcast, right? And traditional broadcast uses football games to also get people to watch some of their other primetime programming, right? That translates into more ad dollars. Like, that's kind of the traditional formula, and I kind of understand that. Does Netflix ultimately have to have a net ad of so many users for them acquiring NFL rights to make sense?
Well, Amazon, I think, has the sweet spot really is the growth in the Prime membership.
Okay.
You know, based on by locking in these rights globally, I think they're able to now make a much more compelling value proposition for growth in that subscription revenue, much of which drops to the bottom line. And remember, also, Amazon has been growing very fast its digital advertising, you know, revenues. This is going to be another area where I think you're going to see an acceleration. So there's a number of very positive touch points for Amazon, which can help to justify this price tag that they're paying.
I wonder what this means for traditional streaming. I mean, Netflix certainly invented a category when it pivoted from DVDs to streaming. Amazon has done a really good job in the last year. Disney Plus has exceeded pretty much everyone's, even their own expectations in growth. But streaming up till now has really been thought of as this place where you go for on-demand, for content that you can watch at any time. Not necessarily for live sports or even live content, for the most part. For the most part, Tuna. So I'm wondering, what can Amazon do that traditional TV can't because it's streaming? I know they're talking about this X-ray idea and putting in some of those features that you get with Prime Video, but what can Amazon really do to enhance a traditional broadcast?
Well, I think Amazon has, you know, I think they're a pretty unique platform in some respects, right? I think not only are they able to offer this globally, remember, the rights they got are global rights, and that's number one. Number two, I think there's a number of initiatives that comes with these rights in terms of additional programming, NFL, virtual channels, things of that nature. So I think if you're a Prime Video subscriber, the idea that you can all of a sudden get all of these games, the whole package, as opposed to limited number of games they had in the past, that's an additional value proposition. And for the network, for the league, that's a way that they've been able to really expand their audience. Amazon, obviously, one of the leaders out there. And to your point, I think all of these streaming platforms are looking for ways to differentiate themselves, and having a live sports, marquee sports offering on your streaming platform is sure one way that you can do that. And that's why you see the other competitors like Paramount Plus and Peacock. Everyone is trying to make sure that's a must-have within their offerings.
Hey, Tuna, sit tight. We'll come back and continue. We'll broaden out to the rest of the media world in just a moment. Tuna Amobi, he's going to come back with us. Media industry analyst, has watched it for years over at CFRA Research, with us on the phone from New Jersey. Reading Deadline, as Robert Kraft, New England Patriots owner and chairman of the NFL's, put it, said streaming is truly the future.
Yeah, it is.
That's how he sees it. All right, let's get back to world and national news. Off to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Top foreign policy officials of China and the U.S. have been meeting in Anchorage, Alaska, trying to address their differences in policies and worldviews. Bloomberg's Irv Chapman has more on their agendas.
From democracy versus autocracy to freedom of the seas, the two sides are far apart, but there's still the need for an ongoing relationship, Ian Bremmer, founder of the Eurasia Group, said in a Bloomberg interview.
If you are going to resolve or even make significant progress in global climate, the two largest carbon emitters in the world need to have some willingness to work together.
The Biden team is collaborating with Asia-Pacific allies, Bremmer said, but European leaders don't accept the American precept that China is their most critical adversary. In Washington, Irv Chapman, Bloomberg Radio.
Those discussions will be outlined in a briefing following those talks. U.S. health officials are relaxing social distancing recommendations for schools, now saying students can sit as close as 3 feet to one another in classrooms. But CDC Director Dr. Rochelle Walensky says in communities where transmission is high, older students should still be kept 6 feet apart.
Because COVID-19 is spread more likely among older students, CDC recommends that middle and high school students should be at least 6 feet apart in communities where COVID-19 risk is high, unless cohorting is possible.
The new guidelines are aimed at making it easier for schools to accommodate students without needing to remove desks or stagger scheduling. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, so you never know what's going to pop up on the most read list, and this has been on the most read on the Bloomberg since this morning, and it still is. It's the 8th most read story on the Bloomberg. It has to do with super yachts, casinos in the Bahamas. This is Tom Brady's life.
Oh, it would be nice, wouldn't it? So
yes.
So he's got a 53-foot yacht. It's not a super yacht, but he's got a pal like Jeffrey Soffer, who's the owner of a 312-foot Mad Summer, and that is a super yacht. This video emerged of him throwing a football to somebody on a jet ski.
Right. He's on the super yacht, and then he throws it to somebody who's on, was it a jet ski or a little boat?
It looks like a...
did you play it?
Yeah. Oh, yeah. I watched this several times because I was like, did he actually make the? Did he make it?
He made it.
Yeah, that's like a wave runner type thing.
It's pretty.
So it's not like people standing up on a jet ski, and like he's catching it with one hand. It's like a wave runner. It looks like there's 2 people on it, but it's kind of far away.
But he got it. Like his timing is
impeccable.
impeccable.
He's Tom Brady.
Of course he did. 7-time Super Bowl winner. He was seen aboard the super yacht with Florida politician Chris Sprouse over the past weekend, angling for new casino development, according to local media. But again, this video has gone viral. It's kind of interesting, and I guess this story also gets into, if you've been to Florida, I remember once doing like kind of a quick little cruise to the Bahamas, because it's a quick trip, and you can go there and come back in one day, and they're talking about, I guess that's kind of where they're playing.
Yeah, so it's 2 to 4 hours away, depending on, the super yacht that you have, so how quickly you can get there.
Yeah, it wasn't my super yacht.
But as of March 19th, there were 21 more super yachts than last year. That's according to vessel data analyzed by Bloomberg. So Tom Brady's not the only one who's partying there.
No, exactly. And this talks about, partly due to COVID-19 border closures in some of the French islands like St. Bart's and St. Martin. I mean, you can't go everywhere. So listen, as people have been sheltering in place, working from home, I just know from different stories, some of our guests, people are all around the globe, and sometimes they're in gorgeous places like the Caribbean or elsewhere because they can.
And look, he's still on vacation. He deserves a break.
Yeah.
Won the Super Bowl again.
Again. All right, you're listening to Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks remain in the green. 43 minutes to go ahead of the closing bell. S&P, though, on track for a losing week. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is with the Friday edition, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading mixed today with the Dow currently down 125 points. The S&Ps are higher by 6. NASDAQ rises by 86. The U.S. 10-year yield at 1.73%. Gold is up 6, and transports climb 70 points. Among the main 11 SP sectors, telecom, utilities, and healthcare led. Financials were under pressure, and leaders to the upside in the Dow, UNH, Walmart, and Home Depot, while Visa fell 5% and led to the downside. In other news, Nike dropped after revenue missed estimates, while FedEx climbed as much as 7% after its earnings. And the banks dropped after the Fed said relief from the SLR expires on March 31st. Wrapping things up, Visa and MasterCard slumped intraday on a report the DOJ is investigating Visa over its debit card practices. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type Squawk, SQUAWK, on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. I want to get right back to Tuna Moby, media industry analyst at CFRA Research, joining us on the phone from New Jersey, talking everything media, and especially that blockbuster NFL deal for the likes of Disney and, of course, Amazon as well. Tuna, earlier today on Quick Take, I interviewed Rich Greenfield, fellow media analyst. He's at Lightshed Partners. He and his colleagues wrote a piece this morning saying, market down March 18th, 2021 is the day the multi-channel TV bundle died.
Cue dramatic music.
I know. And, you know, Rich has been, to be fair, Rich has been saying this for years, right? Like, he has this hashtag on Twitter, hashtag good luck bundle.
Right.
Is this the nail in the coffin of the traditional multi-channel bundle?
Well, you know, this is a phenomenon that's been going on in drips and drabs for years. And what we saw is that the pandemic has accelerated this secular, trend where, obviously people are looking for cheaper alternatives. And to the extent that they can replicate the traditional bundle through online, streaming platforms, there is a tendency to do that. And that's a secular trend that we would argue that in some respects the Blockbuster deal has actually accelerated that phenomenon. So there is some credibility in that thesis, but it remains to be seen really, how the whole thing will unfold. But most of the media companies actually have recognized that fact. They have accepted that reality, and that's why you see most of them looking to these alternate platforms to kind of support a traditional business.
That's at a certain point, though, you start to pay more per month for all of these streaming services than you do for a traditional cable package. This is something Carol and I were talking about at the break, kind of going through all the different services.
I'm calling it the streaming bundle now.
But there's nowhere to buy that streaming bundle yet, at least. I mean, how does that evolve? Because at a certain point between, Hulu, Netflix, HBO Max, Paramount Plus, the list continues to go on. You're going to start paying a lot.
Yeah, well, I think it comes down to this idea of a synthetic bundle. And, our research shows that the average consumer now has about 3 of these kind of streaming platforms. And remember, it's not a zero-sum game to the extent that all of these, streaming subscribers are necessarily dropping their pay TV subscriptions. There's a fair amount of pay TV, subscribers still holding on to some of these. It's kind of not a zero-sum game. So that means that, while that trend persists, I think it's going to be some overlaps. And the way to think about it is that there are going to be some winners and losers in various aspects of the streaming wars, and everyone is going to pick and choose what they like, and to the extent that the programming gets continued to be chopped up and carved up, whether it's live, on-demand, sports, entertainment, that is consistent with that secular trend that we've been calling for some time.
Tuna, one of the reasons I love talking with you, and I know Tim does too, is like you've just seen the evolution of the media world. I was kidding when we came into the studio. We were talking about some different things and going back to the days of John Malone. We have evolved. It has evolved in a big way, the media world. How do you see it in terms of the more interesting trends that you think are going to be the stories, the companies to watch for years to come?
Indeed, Carol, it's been like a long time since we started talking about it, and it's like an eternity now, right? I mean, the industry itself is barely, recognizable, and who knows 5 years from now? I think the trends are holding down the audience fragmentation, decline in television ratings, acceleration in online viewing, and then also this broadband-only households. These are households just subscribing to the internet subscription without any wireline video, and this is being all driven by demographic changes, the millennials, etc. All of those things are forcing almost like a perfect storm that will continue to radically reshape the landscape. And add to that this streaming wars, which I think is getting a lot of investors excited. You see a lot of media stocks now trading near all-time high, and some of these names were left for dead just even years ago. So who's to say what's going to happen 3 to 5 years from now, which this space looks like an eternity.
One area that I wonder about is that wireline connection that people have to the home. It is getting increasingly expensive to have that broadband-only connection. I've certainly noticed anecdotally my price increased significantly just in the 2.5 years that I've had this connection in this home. I wonder what type of competition actually emerges for that, because so often and for so many years, cable was the natural monopoly because it was so expensive to lay fiber and to lay these lines. So you really don't have that much choice for broadband internet. Is 5G or any of the emerging technologies, is that an actual potential competitor for wireline broadband?
That's a great question, and that's really the holy grail here in terms of what could radically the kind of, if you want to think about it as the next potential catalyst that could spur demand and potentially reduce costs. But I think you also touched on another issue about the competition in the broadband. And I know we just had a change of administration, and it kind of comes down to this issue of net neutrality, which is never going to go away. And who knows what the Biden administration is going to do in terms of potentially putting it back on the docket. That was repealed by the other administration. And if it comes back, then it raises the whole issue of the service implications of broadband and what the internet service providers are doing to extend that they relationship with the content companies. So all kinds of moving parts there.
Good stuff. Hey, Tuna, thank you so much. Be well. Have a great weekend, and hopefully we can talk soon. Tuna Moby, media industry analyst over at CFRA Research, on the phone in New Jersey. You're listening to Bloomberg Business Week, and this is Bloomberg.
This is some great music.
I know. A little bit of football. All right. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
I have a song.
What is it?
It should be everybody working for the weekend.
Is that going to be Dave's? Is that going to be
that's
Dave's
where my
song
head is.
in just a couple minutes?
Probably not. But we will find out.
Yeah, that's where my head is too. Also thinking about small caps.
Oh, okay. Yeah, no, I'm not. Okay, but we'll get there in a moment. All right, let's get back to your top business stories. Another check on the trading day, getting ready in less than a half an hour to wrap up this week.
Focus, guys. We got 28 minutes to go ahead of the closing bell. What a week it has been. Stocks higher. Treasury yields retreating from the highest levels of the day as investors weigh the risk of inflation with economic growth accelerating. S&P paring its weekly loss. And again, with 28 minutes to go right now, we've got the S&P on the week down by about 0.5%. S&P now higher by 5, up by about 0.1%. The Dow down 131, lower by 0.4%. And NASDAQ up 87 for the NASDAQ Composite Index. That's a gain right now of about 0.7%. 10-year down 5/30 seconds. 10-year yield 1.72%. Gold up 0.3%, up $4 the ounce at $17.40. And West Texas Intermediate crude up 2.6%, $61.55 for a barrel of West Texas Intermediate crude. NASDAQ 100 index, by the way, up by 0.5%. To put that in context, NASDAQ Composite Index up by 0.7%. And to be clear, that is the NASDAQ 100 index up by 0.5. A dozen states are expanding access to COVID vaccinations earlier than planned for every adult, accelerating the biggest such campaign in the country's history, making long strides toward President Biden's May 1st deadline for eligibility. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health, and he says the big challenge right now is convincing those who are hesitant to get the shot.
You know, we can immunize 5 million a day, but if we only have 2 million people a day who want to take the vaccine, then we've hit an artificial ceiling. And so we have to work on getting the message out. This vaccine is safe. It's efficacious. It's efficacious against even these new variants that are coming around. It needs to be sent out there so we can get public input and buy-in to getting into the vaccine lines.
And the Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track, Pfizer down 0.5%, BioNTech up 2.7%, AstraZeneca shares down by about 0.2%, Moderna up by 0.7%, J&J Johnson & Johnson up by 0.1%. We're working for the weekend. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Done,
I like
Charlie.
it. Thank you, Charlie Pellet. This Cheryl's doing karaoke.
Paul Brennan's looking at me, our producer, like, Master, don't do that. Don't do that. Little Jethro Tull for everyone. My sister Evelyn was really into Jethro Tull, so I grew up listening to that.
I had that album when I was a youth.
A youth? What kind of youth?
A boy.
How young a boy? How young a boy were you?
Right around teenage years, because today is the 50th anniversary of the release of that album, Jethro Tull's Aqualung.
Which makes Ian Anderson.
That was the title track.
So that makes Ian Anderson what? In his 70s, 80s?
Yeah, that sounds about right.
Wow. That's crazy. I'm looking up what his age is. You looking it up too?
Yeah, I'm looking it up.
We're all looking it up.
73.
Oh, pretty young dude. Wow. That's pretty young. So he was pretty young when he was doing that stuff. Wow.
Absolutely.
That's impressive. My understanding is he didn't really know how to play flute and I think taught himself or something. Like, it's really kind of wild, his story.
Yeah.
Dave's like, master, whatever. Just can we do my
serious vocal issues over the years, and actually saw him a couple of years ago out at Forest Hills Tennis Center.
How was he? Was he good?
Yeah, I mean, it was okay, but he just struggles to sing these days. You know, I've also seen a band with Jethro Tull's guitarist Martin Barr leading it, and I tell you, it sounded better than me than Jethro Tull these days. But I digress.
Sorry, Ian. Sorry, Dave. Just you know, Dave dissing you a little bit. All right, so let's get to the chart of the day. We're looking at small caps.
You know, this is why Tim was thinking small earlier. It's all about, you know, if you want to think about it this way. If you were to put, you know, small caps, smaller companies, and relatively cheap stocks, value shares together, you'd basically get the stock market's equivalent of Aqualung over the past several years. You know, nobody wanted to get near it. And the past year has been a whole different story, to the point where if you go back to last March when the bull market began, you know, you've really seen, you know, the Russell 2000 Value Index now to keep up with, you know, NASDAQ composite. And in fact, in the last couple of months, where the NASDAQ stocks have faltered, you've seen the Russell 2000 Value Index keep on going. Smaller companies, you know, cheaper shares adding to their gains. And this is a comparison that showed up about a week ago on Twitter, courtesy of the folks over at Richard Bernstein Advisors. And so what I did was carry it forward, and you find out that as of yesterday, the Russell 2000 value was beating the NASDAQ, going back to the March lows, by 38 percentage points.
Wow.
And in fact, in the beginning of February, it was only a single point. So you can tell that, you know, the smaller companies are pulling away at a time when the larger ones represented in the NASDAQ are really kind of struggling. So it's a contrast that, if nothing else, is worth a look. And if you haven't seen it already, folks, send me an email. I'll get it to you along with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Full disclosure, in my 401k, I've had a bunch of exposure to small caps, and it's been a nice little ride.
Wow, we're getting a peek into the 401k on a Friday afternoon.
Well, you know, like you can't move around real quickly and stuff, and, you know, but it's been fascinating to watch.
Yeah, the 401k, though, I mean, if my investments are anything like yours, I mean, they're in the sort of broad-based small cap index.
But still not bad.
Kind of shifted to one way or the other, growth versus value. And that's, you know, where Bernstein's looking at this point, certainly, is value stocks more broadly and smaller companies in particular in this case, hence the chart.
Right, kind of divvying down into a group, right, and really finding out where the value is.
Dave, it's too bad your charts don't go into the future.
What?
So we don't, you know where these go, right?
We never know where these go.
So that we could be on our super yacht, like Tom Brady.
Finance goes, past performance is no indicator of future results, or something like that.
Yeah, exactly. Good stuff. Great song. Loved it, Dave. And Dave's going to be back a little bit later on with his stock of the day. Yeah, we'd all be on those super yachts, throwing our footballs to...
Yeah. Hindsight, as they say, is 20/20.
Exactly. Hey, folks, just about 20 minutes left in today's trading session, getting ready to wrap up the day and the week. Right now, the S&P 500, we've got pretty much your equity averages at their highs. S&P up about 10, Dow still down about 95 points. NASDAQ, though, a gain of 106. And as I said, best levels of the day so far.
Let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey there, Tim. President Biden and Vice President Harris are in Atlanta to focus on the pandemic and those growing concerns about violence directed toward the Asian American community. They both started out with a visit to the CDC, where Biden thanked the workers there.
You are the Army. You're the Navy. You're the Marines. You're the Coast Guard. I really mean it. This is a war. And you are the frontline troops.
They're also holding a meeting with Asian American leaders at Emory University. That follows this week's deadly shootings in the Atlanta area. 6 of the 8 victims were women of Asian descent. Homeland Security Secretary Alejandro Mayorkas is spending some time along the southern border today amid growing concerns about the surge of unaccompanied migrant children. Mayorkas is leading a bipartisan delegation of senators. They're being briefed on the processing, sheltering, and handling of the migrant children. No change of venue and no delay in the trial of Derek Chauvin, who's accused of murder in the George Floyd case. Defense attorneys had argued that $27 million settlement for Floyd's family would taint the jury pool. But Judge Peter Cahill called the timing unfortunate, but said a delay would do nothing to stem the problem of pretrial publicity.
Unfortunately, I think the pretrial publicity in this case will continue no matter how long we continue it. Perhaps some of it may, with time, be forgotten by people.
The judge did grant a defense request to allow limited evidence from a 2019 arrest of Floyd, which has some similarities to his 2020 arrest. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thank you, Nancy. So yesterday I spoke with Senator Elizabeth Warren about this $500 billion proposal to shift U.S. transportation away from fossil fuels. We had a wide-ranging interview where we touched on a lot. In this excerpt, though, Senator Warren explains why Republicans should get on board with the bill. Take a listen.
You name a Republican who lives in a state, who represents a state that doesn't need an upgrade in their infrastructure. Right. Name a Republican who isn't struggling back home with problems of gasoline-powered or diesel-powered buses and trains and mass transit, highways that need repair. We can do this together. It's kind of one of the things that's sort of everybody's best view of what the Senate ought to be able to do.
So the big question, how do you get Republicans on board, especially after a $1.9 trillion relief package from President Biden meant to help every American who's been affected by the coronavirus doesn't get a single Republican vote?
Is this a trick question? How do you get Republicans on board?
No, I think she makes a good point about infrastructure and the fact that it is one of those things that Republicans and Democrats agree that needs to be fixed in the country. They just don't agree on how to fix it.
Well, yes, and they have for years.
But I did press her on which Republicans she had spoken to, like who are the Republicans, like give me names. And she said that she does speak to her colleagues, but she wasn't willing to give names yet on who she can get to support it. But the support that she has includes 15 Democrats and, of course, Bernie Sanders, who's an independent.
What I think is it's great that we're having the conversation and people are talking about it and it's being talked about in Congress. I think, at this point, most would agree that, listen, there are two sides. This goes back to what we were talking about with Dr. Ian Lusbader about like having conversations about things to kind of reduce the stress in our world. Republicans are going to have their thoughts, Democrats are going to have their thoughts, and hopefully there can be some give and take, but let's hope we can move the country forward when it comes to infrastructure.
There were a lot of questions too about in the movement to green, and we talked to Mark Champion about this earlier this week.
Yeah.
China controls the vast majority of rare earths that are required for the production of renewables. So those include things like the rare earths that are required to be used in windmills, for example, and parts in electric cars and battery production.
Batteries, big time, yeah.
And that's going to become an issue. So I also talked to Senator Warren about how we decrease our reliance on China and other countries. In China also, about 60% of solar panels are produced in China. And it's not like oil, as Mark Champion told us earlier this week, where you need to keep buying the oil over and over again. Once you have the solar panels, you can produce that electricity yourself. But still, in this day and age when we do have so much tension with China, we are still continually reliant, even if we want to move away from fossil fuels.
Well, the thing, too, is, and we've had these discussions that, China's definitely moving forward in terms of embracing new technologies and also embracing alternative energy and different technologies in that world. And the thing is, if we are slow to the table on this, the standards, the technology will be set elsewhere around the world. And it's either a case of then we're playing catch up or we're buying, our supplies are coming from outside the United States. So this is also an opportunity. We talk about this a lot, and we have a lot of guests who come on and say this is an opportunity for the United States specifically, especially in the world of green technologies, to step up and help develop them and create industries, businesses, and jobs here in the U.S. and elsewhere, and be a player within this industry.
So what you're saying is exactly what Democrats and Republicans agree on. It's just, once again, they do not agree how to get there. Both Democrats and Republicans say we need to bring these jobs back to the U.S. We need to start producing this stuff in the United States. They just don't agree on how to do that.
And what is it that Republicans don't like specifically about the Democrats' plan here, or AOC's and Warren's?
I mean, well, it's interesting because the Green New Deal, as our colleagues pointed out in the exclusive Bloomberg News story about this before I interviewed Senator Warren, the Republicans have used the Green New Deal as a cudgel. And even though it was just a proposal, and it's a talking point, especially for conservative Republicans, a talking point that is used, I think, to really highlight the most progressive wings of the Democratic Party. So I do wonder why she does want to use the word green with this bill, if she is trying to get bipartisan support. But that was something we didn't get to talk about.
The only things I would say is I think about all of the summits, whether it's, Davos or whether it's, we did Bloomberg New Economy, our big forum. I mean, everyone's talking about, especially right now, where you're spending trillions of dollars into the global economy to get the world's economies back on track after COVID. Why not spend that money in a green way and solve another problem that is facing all of us much more faster or much more rapidly than everybody anticipated? So why not kind of do it in a smarter way? And it sounds like this is what she's thinking too, that we've got to redo infrastructure. So why not embrace green technologies as we do it?
So one thing that I also talked to Warren about was inequality, and so it's something she is certainly passionate about. She's talked about the wealth tax, and she continued to talk about the wealth tax yesterday, and she still thinks that is a good idea, even in the context of the report that Biden is thinking about a federal tax increase, the first one since 1993. But she also sees this as a way to decrease inequality because it really is focused on public transit and getting public transit around the country up to snuff.
And listen, this is the goal of net zero, U.S. carbon emissions by a certain date, 2050. And if we don't start to take the steps, it'll be here before we know it and not in place. All right, good stuff. And we should check out, where can we find that full interview with Elizabeth
Full interview
Warren?
at Bloomberg.com, full interview on QuickTake as well, Bloomberg.com/QT.
All right, great stuff. Hey, let's take another look at the markets. We're pretty much holding at our highs of the day, but a little bit of a mixed trade. We are seeing some declines on the Dow, slight gain on the S&P. NASDAQ, though, up about 102 points. Let's bring in Lamar Villery. He is portfolio manager at the New Orleans-based Villery Funds. They've got some $2 billion in assets under management. Joining us on the phone in New Orleans. By the way, the Villery Balance Fund up nearly 56% in the past 12 months, beating just about all of its peers in the category. That's according to our data. Lamar, how are you?
I'm doing great, thanks.
Well, so tell me a little bit about the environment, the investment environment right now. You guys, your fund, your balance fund has done really well. I know it's been, though, maybe a tougher last couple of years. What's the environment look like right now, and what's your thinking about a balanced portfolio? What does it need to look like?
Sure. So, as we've talked about in the past, Carol, we're generally speaking, we're allowed to invest in anything we want as far as stocks go, but we really have tended to lean heavily on smaller cap stocks. And as your listeners just heard you talking about and have heard for a while now, small caps have had really an incredible run, which kind of puts us in an interesting position. As you mentioned, we've had a great year. Following some tough years for small caps, but things are looking great. That, of course, makes us nervous. So we look at it and say, well, we're really glad to have had this great performance. But we've actually been really kind of looking at some a little bit larger caps, and luckily our investors let us go where we see value, and sort of some of the mid and larger cap stocks have been where we've been looking as of late.
What's catching your eye in that category?
Sure. So one that we've kind of held for a while, but really has pulled back here is Progressive. So everybody knows Progressive because they run about 50 commercials every time you watch a football game.
It's so true.
Yeah, but which seems like, wow, how can they spend all this money on advertising and still make money? And the answer is simple, because they're competing with the legacy insurers who all have agents everywhere, and that's way more expensive than paying Flo to tell some funny jokes in a commercial.
We all know who that is.
Yeah, exactly. So in general, you look at Progressive, and it had a nice run with the basic thesis being that there's fewer miles driven. The people were paying the same amount for their car insurance, but were working from home, so it had a pretty steep rise. And has pulled back a little bit. We think it's still a great opportunity because, number one, they're growing in their commercial space. So whether it's Ubers or other delivery, that's an area that's growing with them. And number two, we do think miles are going to go back up. Miles driven will go back up, but not as much. Wherever the pendulum ultimately winds up as far as people working from home, I don't think we're heading directly back to full office buildings filled with packed garages. So I do think Progressive has
Wait, not ever, or not anytime soon?
Not anytime soon. I think you're definitely seeing people out and about, and people are coming into the office, but I don't think it's going to swing completely back to where it was, maybe ever, but at least not for a pretty good while.
So it's interesting too. You mentioned Progressive. So it's funny because I talk about the insurance industry. I mean, there are aspects of the insurance industry, obviously, that you like. There's parts of it, though, that I wonder are just going to continue to be tested, especially because of climate change and other things that, spells trouble for the insurance industry. How do you think about that?
Well, as luck would have it, we've actually recently invested in a smaller cap property and casualty insurer called Palomar, and they've got a heavy book on a lot of earthquake insurance, but also storms and other things. And we struggled with your point a lot. Palomar has pulled back recently because of the ice storms, and before that because of the seemingly countless named storms in the Gulf. So how do you get comfortable with that? Well, we spent a lot of time with the management team and really understood that they have very limited risk. They offset most of their risk to the reinsurers. So we think they've got essentially a better mousetrap in how they're writing these policies, and so there are some opportunities there. But broadly speaking, you're right. It is a concern that you're going to have more events that cause problems.
So down 21% this year, Lamar. So have you been buying into the selling, thinking because it's a value play here, or what?
That's exactly right. We think it's a value play, and we don't think it's a value trap. We think it's an inexpensive stock with some pretty bright long-term prospects. So one like that, we think is one that we look forward to growing. It's not going to be a smooth path. It won't look like a bond. It's going to look like a small cap stock. It will have highs and lows as the weather issues pop up here and there. But we think the risk is not what the market seems to think.
Ticker is PLMR for those who are listening, Palomar Holdings.
Hey, Lamar, I got to ask about Visa because it's one of the biggest holdings that you have in the fund. Down significantly, at least earlier today, on this news that the company faces this U.S. probe over its debit card routing practices. Are you seeing this as a big risk to the company?
We don't think it's a huge risk. We actually originally bought into the company when there was a similar fear when the Durbin Amendment was coming out, and we thought that created an interesting opportunity. So for us, we don't think there will be regulation of debit cards. We don't think the company's acting unfairly, and we think if there's much more of a pullback, we'll probably add to our position.
Yeah, Visa down about 5.4% as we speak.
Right.
So talk to us about another name that you like is Steris. Ticker is STE. Tell us about this one. Contamination control.
Yeah, exactly. So this was a funny one, and we still think it's interesting, but this one really went down during the pandemic, which we thought was crazy because they're in healthcare settings and they're focused on contamination and infection prevention control. So what would seem to us to be a no-brainer. Positive. Obviously people are trying to stay away from hospitals, but they're going to go in now. The long-term outlook for this industry is great. 1 in 20 patients that are admitted to a hospital are going to get an infection from being in the hospital. This costs the healthcare system in the U.S. alone $10 billion a year. So, we think this is a great place to be sitting. It's not an aggressive growth stock. This isn't one that we're looking to double, but we do think it's got steady growth. 80% of the revenues are recurring. And by the way, while you sit there and wait, you're earning almost a 1% dividend yield. So we think this is a great kind of core holding.
Tim's never going to go to a hospital.
I know.
Now.
That's just like such a startling statistic. I do wonder, though. If we are going to see any fundamental changes in the wake of the coronavirus crisis in terms of sanitization. I know that buildings that people are going to are certainly sanitizing in a lot different ways right now, and hospitals as well. Don't you think that number can potentially change? I mean, hopefully it does. That's very alarming and says a lot about U.S. healthcare.
Yeah, it's absolutely one you would hope would change, but it's certainly, as we said, it's a big expense for them. So we, I guess, as investors, we hope and believe that Steris will be a part of that change. So that we think spending is going to go their way, and so this is a good hold.
Yeah, makes sense.
Hey, Roper Technologies, one more. Ticker is ROP. It's down about 8% so far this year. It's kind of an industrial play, right? But it's also software.
Yeah, it's actually not as industrial as people think.
Okay.
Its legacy business was mostly industrial, but really the company's transitioned over the last 10 years or so in a much more technology-based. They're really focused. They buy businesses, so it's really a portfolio of companies with a fairly small management team. But they focus on buying things that have great free cash flows, recurring revenues, and good margins. So they're buying very high-quality businesses. And, this is one where it's difficult to buy Roper because it always trades at a premium, and investors generally feel okay about that because it is a great business and it's got a solid management team. You don't get these pullbacks that often. It has these little hiccups every once in a while that enable you to buy it. It's never going to look glaringly cheap, but anytime it doesn't look too expensive, and right now is one of those times that this is a decent opportunity to get involved.
All right, well, good to talk names with you. Lamar, thanks so much. Have a good weekend. Lamar Villery, portfolio manager at Villery Funds, on the phone in New Orleans. Stick around. We've just got about 3 minutes until that closing bell.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it, sound of the closing bell at the New York Stock Exchange. Folks from DMY Technology Group ringing that closing bell, and it is on to the weekend. Late day fade, S&P lower, and this update is brought to you by Withum, a forward-thinking advisory and accounting firm offering industry expertise and innovative solutions for your business. Experience the Withum way. Innovative, adaptive, effective, trusted. Visit Withum.com for more. far. After spending much of the day in the green, we saw the S&P fade in the final couple of minutes of trading, down 2 points, finishing the week at 39.12, a drop of about 0.1% on the week. The S&P 500 index was down by about 0.7%. Treasury yields retreated from the highest levels of the day as investors weighed the risk of inflation with economic growth accelerating. The S&P, as I mentioned, lower by 0.1%. The Dow down 234 today, a drop of 0.7%. NASDAQ had a gain of 99 points, up by about 0.8%. 10-year yield 1.72%. As for the market backdrop, Brian Levitt is global market strategist at Invesco Advisors.
Let's remember, a lot of this support on the fiscal side is going to end up in markets. It's some of it is finding its way into middle-income household pockets, and that's going to find its way into markets too. So I would say asset price inflation is a good part of this story.
One of the day's standout stocks, Clovis Oncology, surging 47% after its treatment for relapsed ovarian cancer met its primary endpoint in a phase 3 study. After earnings, FedEx shares today jumped 6.1% after delivering better than expected earnings. Nike down by 4%. Gold up today by 0.4%, recapping S&P down 0.1. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like. Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaking. Let's do it.
On Bloomberg Radio.
We did it. Wrapped up the day, wrapped up the week.
We did. Congratulations, us.
Thank you. Exactly.
And all of you.
Congratulations. I hope you're all getting ready for a good weekend. So what did it mean? S&P 500, kind of an even split today. It was that kind of a day. 231 names in the S&P 500 higher for the Friday trade. 272 lower, 2 unchanged. Charlie breaking down those main averages. We did end down 233 points on the Dow. We saw a leg down in the last few minutes of trading for both the S&P and the Dow, so both of them ending lower. The NASDAQ, though, managing to eke out that gain, as Charlie mentioned, up about 99 points.
Let's take a deeper dive into the S&P 500 and check out some of these sectors. Communication services higher by 0.8%, the best performer. Consumer discretionary higher by just about the same. Healthcare higher by about 0.3%. Let's call it 0.4%. We can round up there. On the laggard side, though, real estate and financials, both laggards today, both down 1.26%. Industrials down by 0.7%.
And just quickly for the week overall, we were down 0.5% on the Dow Jones Industrial Average, down 0.8% on the S&P, and down 0.8% as well on the NASDAQ. Want to get right to our own Vince Signorelli. He's Bloomberg News Global Macro Strategist on the phone in Westchester. Are you exhausted this week? I know Tim and I are.
No, it really is. I actually said to my wife last night, I need a few days off on a beach, but like totally by myself.
No offense.
I love you, honey, but
I don't want any, I forget 6 feet. I don't want anyone around me.
No, it was that kind of a week. All right, so what do you, listen, there was a lot of, I feel like, taper tantrums, I don't know, about the Fed missing inflation and yields moving higher. How do you see it? What's the conversations? Is it just a case the market's kind of getting back to normal as the economy gets back to normal, or is it that the Fed's falling behind?
Well, I think people are going to expect the Fed to fall behind. I think Jay Powell said it quite clearly in his press conference, is that they're prepared to fall behind because they think they can catch it. That's going to be something we should wait and see when it happens. But he's clearly said of the Fed's dual mandate, he's more concerned with 10 million people out of work, which is the full employment mandate, rather than price stability and inflation, because he doesn't see inflation as being a permanent structure. And again, this is a lot of the inflation we're seeing is food and energy, which the Fed has always said and always believes is transient, and it's transient until it becomes permanent. So, we'll see if that happens. And if it happens, they will be definitely behind the 8 ball and definitely going to have to chase after it.
Yeah, I mean, I think the big question that a lot of investors obviously had this week was what the Fed was going to do, and it did seem like there were no surprises there. But why did we continue to see the repercussions more so yesterday than on Wednesday after we learned what the Fed's decision was?
Yeah, I don't really know. I was kind of actually a bit surprised on Wednesday when the market.
I'm glad I'm not the only one.
No, because he didn't say anything different. He just, and I have to believe that's just machine-driven things where they pick out the words and they go with it. And realistically, all of these algos are written by the people who probably all went to school with the same professor. So they're all very, very similar in how they react. I mean, you saw this morning when the Wall Street Journal, was made public about his op-ed piece in the Journal, the markets pulled off the lows. And I sort of scratching my head going, they're actually rallying off the lows based on an opinion piece that is exactly what he said on Wednesday. And that's sort of the machine trading doing it to you. And now you could see the sell-off at the close is pretty much realistically where we need to be. I mean, there's a little quirk in the system that the Fed's not, well, I wouldn't say they're not looking at it. I'm sure they're aware of it. They're just not reacting to it right now. Is with the stimulus plan and with reopenings and when things perking up, the services sector inflation, which is now a minus 0.25%, is going to be back in the picture. Prior to the pandemic, it was over 3%. So if you put food and energy, services sector inflation all together, with some pent-up demand, reopenings, and travel and leisure, we could see a real surge in inflation this year. Whether it lasts into 2022, that depends on the economy. But the fact that it's going to be dormant and not rear its head is impossible, in my opinion. I just don't see that happening.
Well, it's just a case, and the Fed had addressed this, Jay Powell, right, Vince, it's whether it's transitory, right? It's because right now we're going to have probably a supply-demand disconnect, that all of a sudden a lot of supply, whether it's people wanting to travel, people wanting to buy things, what have you, there will be a disconnect. And until those supply chains ramp up again, enough workers come back to enable those supply chains to ramp up, we will see that disconnect and we will see prices spike. But you're right. Jay Powell seems to think it won't be, for the long term, but it just depends whether or not we do see that increase. Stay with us.
In the past year during the pandemic or so, if you look back at retail sales after every stimulus plan, you've seen a spike in consumer spending. And depending upon the size of the stimulus, the first one, it lasted close to 4 months, I think. And then retail sales went lower and eventually went negative. The last stimulus meeting was a small one. Retail sales went positive for a couple of months and then went back negative again in January. The February data. We expect now, obviously, the next few months with this stimulus to repeat what it did in April. If we get reopenings and the economy comes back and supports, then we should see more of a continuing of retail sales. If not, then you're going to see retail sales fall off again. And at a time going into the third and fourth quarter, you've also got the foreclosure forbearance and the rent forbearance ends in June.
Right.
I don't know what the Senate's appetite is for extending that, because if things don't come back to normal by the summer and people aren't back to work, that's going to be a big problem on the economy.
Vince, we got to run. We're going to head to Anchorage, Alaska, where Secretary of State Antony Blinken is making some comments. Let's listen in.
With our Chinese counterparts over the last couple of days. And we certainly know and knew going in that there are a number of areas where we are fundamentally at odds, including China's actions in Xinjiang with regard to Hong Kong, Tibet, increasingly Taiwan, as well as actions that it's taking in cyberspace. And it's no surprise that when we raised those issues, clearly and directly, we got a defensive response. But we were also able to have a very candid conversation over these many hours on an expansive agenda on Iran, on North Korea, on Afghanistan, on climate. Our interests intersect on economics, on trade, on technology. We told our counterparts that we are reviewing these issues with close consultation with Congress, with our allies and partners, and we will move forward on them in a way that fully protects and advances the interests of our workers and our businesses. But just to take a step back for a moment, there are two things that we wanted to do in coming here and meeting with our Chinese counterparts. First, we wanted to share with them the significant concerns that we have about a number of the actions that China's taken and the behavior it's exhibiting. concerns shared by our allies and partners, and we did that. We also wanted to lay out very clearly our own policies, priorities, and worldview, and we did that too. Jake?
Thanks, everybody. As the Secretary said, we expected to have tough and direct talks on a wide range of issues, and that's exactly what we had. We had the opportunity to lay out our priorities and intentions, and to hear from the Chinese side their priorities and intentions. We were clear-eyed coming in, we're clear-eyed coming out, and we will go back to Washington to take stock of where we are. We'll continue to consult with allies and partners on the way forward, and of course, on issues ranging from Iran to Afghanistan, through the normal diplomatic channels, we'll continue to work with China going forward. So we thank you all for the time you've taken here, and we look forward to getting down to business and to advancing the interests and values of the American people.
All right, so that's Secretary of State Antony Blinken and National Security Advisor Jake Sullivan in Anchorage, Alaska. Keep in mind, this is following a joint statement after the first high-level talks between the U.S. and China since President Biden took office. And we know that there have been tensions between the two nations, certainly from the previous administration, but even in the subsequent one in the early days. And we did hear from the two officials talking about constructive talks on an array of issues.
Yeah, Blinken saying the U.S. had very candid conversation with China, but at the same time saying that China got defensive responses when they were talking about what was the human rights abuses that are happening there, cybersecurity issues as well. That said, there were issues where he said, quote, our interests intersect. Those include Iran, North Korea, Afghanistan, and the climate.
Exactly. And they expected to have, a tough round of conversations between the two sides. But what was key, we heard this both from the Secretary of State and the National Security Advisor, saying that they needed to lay out the U.S.'s own policies and point of views and basically set the record straight in terms of where this administration is coming from.
And look, I think one of the biggest pieces of news from this is that the U.S. has not announced any breakthroughs with China after these talks.
Yeah, exactly. But the talks, no doubt, will continue. All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave! Who? Dave! Hey, Mr. Wilson!
Hey, Mr. Wilson, come on in and give us your stock of the day.
Acutus Medical, Tim. It's a maker of products used to diagnose and treat irregular heartbeat. The company was founded in 2011 and went public last August. Acutus's focus is reflected in its stock symbol, AFib, AFIB. It's short for atrial fibrillation, the phrase doctors use to describe a heart rhythm issue. Acutus made its initial public offering at $18 a share. Now, the stock more than doubled in its first 4 weeks of trading, but the gain didn't last. About 2 weeks ago, the stock fell below its IPO price. Acutus reached a new low after coming out with fourth quarter results late yesterday. Revenue fell short of analysts' average estimate in a Bloomberg survey for the first time since the IPO. The company also had a wider than expected loss. Now, Acutus lost buy ratings after the report from William Blair and J.P. Morgan, two of the only 4 firms covering the stock, according to data compiled by Bloomberg. The shares fell as low as $14.45 and closed at $15.51 for a loss of 7.8%.
All right, there it is.
Yeah, exactly. So a little bit lower. What is it doing for the year, Dave?
Well,
it's down 46%. Ouch.
Yeah.
Yeah.
It's definitely had its struggles this year. And, it's the classic case of the newly public company that everybody gets excited about early on. And then a few months pass and the excitement fades.
And I also, wonder, too, that if you're kind of in a narrow world, if it takes off and it's working and everybody's tapping into it, that's great. But if it doesn't, it can be problematic.
Yeah, I mean, it's all about the size of the market, what you're addressing and how much competition do you have. I mean, all these sorts of issues. I mean, anytime you're talking about a relatively small company, and after today, you're looking at $436 million in market value, which isn't all that much. I mean, you got to be able to pick your spots and find an area that's going to do well. And let's face it, we got all these companies coming public now, a lot of them blank check firms, SPACs, and we'll have to see if we don't end up with a few more examples like this down the line.
Smart ticker symbol, too.
What is it?
AFib.
Oh, AFib. Yeah. Really nice. We're going to talk with another SPAC, actually, that went public this week.
Ooh.
A little bit later on.
Cool.
All right, good stuff. Dave Wilson, you have a good weekend. Tim Stanovic, you have a great weekend.
Thank you. I will. You too.
All right, see you on Monday. All right, everybody, let's get off to Nancy Lyons. She's in our D.C. newsroom with World and National News. Hey, Nance.
Hey, Carol, you heard it here just minutes ago. No breakthroughs in talks between China and the U.S. Secretary of State Tony Blinken says they were at odds on some points.
There are a number of areas where we are fundamentally at odds, including China's actions in Xinjiang with regard to Hong Kong, Tibet, increasingly Taiwan.
Blinken says the U.S. made it clear that these issues are of concern as well with U.S. allies. Kids can sit closer together in class even during the pandemic under the latest guidance from the Centers for Disease Control. Bloomberg's Nathan Hager reports from Washington.
The agency now says students can safely sit 3 feet apart in the classroom rather than 6. The new guidance says schools that do decide to seat kids closer together can use COVID-19 testing to add extra protection. Previous recommendations for installing physical barriers in the classroom have been removed. The guidance applies to all elementary schools as well as middle and high schools unless they're in areas of high community transmission. That's defined as 100 cases per 100,000 people for the last 7 days. In Washington, I'm Nathan Hager, Bloomberg Radio.
Well, President Joe Biden and Vice President Kamala Harris toured the CDC in Atlanta today and thanked the scientists there for their work in the fight against COVID-19.
We owe you a gigantic debt of gratitude, and we will for a long, long, long time.
Biden and Harris are also meeting with Atlanta's Asian American community following this week's deadly spa shootings, in which 6 of the 8 victims were Asian women. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Now let's go to Charlie Pellet for a business flash.
Hi, thank you very much. And here's what's going on. Turned out to be a mixed Friday, losing week for the U.S. stock market on the week. S&P down 0.8%. NASDAQ this week down 0.8%. The Dow on the week down 0.5%. Today's numbers, mixed trading. Late session fade happened in the final couple of minutes with the S&P falling 2 points, down about 0.1%. NASDAQ had an update today. Technology shares were the outperformers. NASDAQ up by 0.8%, higher by 99 points. The tech-heavy NASDAQ 100 index up 0.6%, and the Philadelphia Stock Exchange's semiconductor index, the SOX, up 1.2%. Russell 2000 up by 0.9%. S&P, as I mentioned, lower by 0.1%. The Dow dropped 234, down by 0.7%. 10-year yield 1.72%. Treasury yields retreating from the highs of the day as investors weigh the risk of inflation with economic growth accelerating. West Texas Intermediate crude rebounding today by 2.5%, 61.49 a barrel. Gold up 0.3%, 17.42 the ounce. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So this week, another SPAC went public on Wednesday. It's the Athena Technology Acquisition Corporation. It's a $250 million blank check company co-founded by our next guest, who also founded a cybersecurity company, Extreme Solutions. She is chair of that company. She spent 22 years in the military, so many chapters, so impressive. Great to welcome Phyllis Newhouse. She's CEO and co-founder of Athena Technology Acquisition on the phone in New York City. Phyllis, great to have you here on Bloomberg Radio. I caught a little bit of your interview with our own Matt Miller earlier on Bloomberg Television. First of all, congratulations. The space is crowded, though. Why is SPAC?
Well, thank you for having me, number one. Sure. So, we deliberately created the company to target the sectors in which our diverse team has deep knowledge, experience in our professional relationships, and we're all women. And we were dedicated to ensuring that the women benefit from being early movers in the SPAC, that we're able to achieve something that hadn't been done before. And so what we decided to do was, we realized that it was a lot of, people say, well, the market is getting saturated. But what we realized is that we had something that was very different than what you see with most SPACs.
How is it different? Just because of so many women involved, or?
Well, no, not necessarily. We're all, that is one thing. We're all women. But here's the thing. Here's a takeaway. When we span across industries, from investment banking to private equity to VC to founders to creators. We have three women in the SPAC that started businesses from nothing and are doing $1 billion in revenues. So we believe that founders like to talk to founders. We understand, and we believe that because of the proprietary deal flow that we've been able to put together, we believe that our SPAC is very different because it was strategically done to win. And I believe that any company that we bring forward will benefit from this group of women that we've been able to put together.
And I just want to put out some of the names. Stacey Abrams, Kay Koplovitz. She was, of course, former USA Network's founder. You have, gosh, I'm going through the list. It's just so impressive. Yes, Kristen Dickey, former managing director at BlackRock. You're right. They cross different different parts of our investment world, our business world. Having said that, though, so obviously you can go anywhere when it comes to investments. Is there any criteria in particular that you think will be a common theme among the investments that you're looking for?
Well, again, this goes back. So if we're targeting, revenue generating early, companies early stage in fintech, cybersecurity. Now, what you have been seeing is a lot of companies in the cyberspace. We strategically brought people into the SPAC that had the cyber expertise. It's a field that is obviously one that's not as complicated as people think, but it is if you look at the growth, we've had 6,000% increase in cyber attacks since COVID-19. And so as a result of that, we wanted to capitalize off the tailwinds that were coming, and we realized that we have the level of expertise and the experience, and we have founders and creators that have done this before. So we believe that this was really one of the things we wanted when we looked at the criteria. Who do we have on the team that have deep level of expertise and experience?
Listen, and one thing I've got to ask you when it comes to diversity, and we know that companies, institutions, investments all do better when you've got a diversity of thought. So, and I ask this of all the institutions and leaders that come on, and especially those that are largely still white men. Are you, though, concerned that you will be missing out by not having diversity of voices? In other words, having some men involved in terms of making some of the investment decisions? It's kind of the reverse thing, right? Because I'm often asking guys, like, where's the diversity? But you know what I'm saying.
Oh, yeah, 100%. And I would tell you, even though we are all women-led SPAC, we have had advisors and trusted advisors that we've reached out to, and other SPACs. Betsy Cohen is one of our SPAC sponsors, where she has a great team. They're not all women, and so they've been in our corner 100%. We understand we're not targeting just women-owned businesses. Ideally, we would hope that would be a great opportunity that we could leverage, but we've realized that all voices at the table matter, and we're just all women-led, but it doesn't mean that we're not bringing all voices to the table, if that makes sense.
Yeah, no, absolutely. Hey, I do also wonder, there's so many SPACs out there, they've just taken off so much in the past year. How concerned are you about a lot of money, be it SPAC investors or private equity, that they're all kind of chasing similar targets, and what that means for the potential to really overpay for a target? And we just have about 50 seconds, then we'll come back and talk some more.
Okay, well, I would say this. This goes back to what I believe our team's most important differentiator is our outstanding deal sourcing network that we developed just for this SPAC, and our partnership with other organizations that provide a unique proprietary deal flow. And so we believe that, there are a lot of companies that are not on other SPACs' radar. And so these are companies in that cyberspace. These are companies that are AI. These are companies we have deep relationships with some of the founders, and so we understand that there is a lot of SPACs out there right now. But we believe that we strategically put this together so that we knew that we had the partnership already.
All right, sit tight for a second, Phyllis. We're going to come back and continue. We are talking with Phyllis Newhouse. She's Chief Executive Officer of Athena Technology Acquisition Corp. It's a SPAC, a blank check company, went public on Wednesday. She's also chair of Extreme Solutions. She founded that company, and she is with us on the phone in New York. We'll get back to that in just a moment. You are listening to Bloomberg Radio, and this is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. We're going to get back to our current guest, Phyllis Newhouse, CEO and co-founder of Athena Technology Acquisition Corp. It's a SPAC, a blink tech company going public this week, listing on the New York Stock Exchange. We'll get back to our conversation in just a moment. But I do want to get another check on how the day wrapped up. Here is once again Charlie Bell.
I thank you very much, Carol Master. Happy Friday, by the way. Late day fade. Final couple of minutes, we saw the S&P fall off and dropping by 2 points, a drop of less than 0.1%. Ending the week, heading into the weekend at 39.13. The Dow down 234, a drop there of 0.7%. Losing week as well for the Dow. NASDAQ had an update. Technology rallying with the NASDAQ 100 index up 0.6%. The NASDAQ Composite Index up today by 0.8%. NASDAQ up by 99 points. 10-year yield 1.72%. Gold up 0.4%. 17.43 the ounce. And West Texas Intermediate crude up 2.5%, rebounding today to 61.51 a barrel. Tech closing higher. Treasury yields retreating from the highs of the day as investors weighed the risk of inflation with economic growth accelerating. But what about the Federal Reserve? Christina Hooper is Chief Global Market Strategist at Invesco.
The Fed really means what it says in terms of the policy framework changing, and that they're really abandoning this concept of preemptive tightening. That's really, really important because that means they are going to let this economy run and if they do see some kind of increase in inflation this year, they're going to be most predisposed to treat it as transitory and sit on their hands.
The Department of Justice has launched an investigation into Visa's practices regarding debit card transactions. Visa shares down by 6.2%. And the Federal Reserve will let a significant capital break for big banks expire at month's end, denying frenzied requests from Wall Street that it extend the relief to mitigate any impacts to the financial system and the $21 trillion Treasury market. Banks lower. J.P. Morgan Chase down 1.6%. Citigroup down 1.1%. Bank of America down 1%, Wells Fargo down 2.9%. BlackRock and Fidelity plan to have their summer interns work virtually this year, breaking with Wall Street heavyweights like Citadel that are bringing them back to offices. I'm Charlie Pallop. That's a Bloomberg Business Flash.
Two sides to every working from home coin.
Exactly. And it's got to be tough for an intern. I mean, part of an internship is making contacts.
I know. It's not the same doing it virtually. All right, Charlie, thank you so much. Let's get back to, that's certainly one of our trends this year, so are SPACs. And we're talking with Phyllis Newhouse. She's CEO and co-founder of Athena Technology Acquisition Corp. On the phone in New York City, that SPAC listing on the New York Stock Exchange this week. So Phyllis, one of the areas that you mentioned, cyber, and that's certainly something that you know a lot about, having founded a cybersecurity firm as well. I do wonder what types of cyber firms you're going to be looking to invest in. I ask because looking at a couple of the cybersecurity ETFs that are out there, iShares, Global X, overall, the group is down. Investors not so keen, it seems, like on some of those names. There's a lot of players out there. So what are you going to be looking for?
Well, if we go back to, as I stated earlier, about cyber attacks being up by 6,000%, you look at companies that perform vulnerability assessments, endpoint solutions. We're looking at the type of companies that have integrated cyber analytics into their platforms, which is really giving the predictive analytics in terms of potentially where an attack may happen. We're looking at cyber operational intelligence platforms. So I think understanding the market and knowing those companies that are out there that exist that are doing really have some incredible solutions are the ones that we would be looking at based off of where we see the potential risk in our global, cyber landscape as a whole.
And when it comes to fintech, I really feel like this is an area, whether it's we've talked a lot about some of the online trading platforms. That certainly has been one of our big stories this week. But when you see fintech and disruption, innovation, there's a lot going on in that space. Any idea in terms of maybe the types of companies that you guys, obviously you can't show your hand at this point, but I just wonder parts of the area of the fintech space that you find interesting.
Well, again, we find that a lot of the fintech integration platforms that integrate into, that are user-friendly for a lot of the financial institutes. But more importantly, if you look at companies where you've had a growth in terms of, when I look at platforms that I around the fintech area, I would focus, and I would tell you a lot of companies are focusing on those companies that have a component of privacy financial platforms. And what do I mean by that? You look at some of the privacy platforms that are now integrated into the financial. Most people are still concerned about the risk, the loss of data, or the sharing of data. And so those privacy platforms that integrate into fintech solutions are what we would be targeting. Again, you can see sort of a trend with us. We're looking at more, privacy, security, financial, but all in that area.
Yeah, which is certainly on all of our radar, considering some of the big, cyber attacks that we've certainly seen. We are ourselves, Bloomberg, one of our reporters, doing a story about all of the surveillance cameras and the hackavists that have been able to kind of expose to the world how many cameras are out there and how easy it is to access. You and your team have roughly 2 years, I believe, to buy up names with this SPAC. How quickly do you think you can put the money to work, or how quickly do you plan to put it to work?
Well, I would tell you this. We intended to talk to companies day one of our eligibility to do that. And we certainly have, again, we put this team together strategically, understanding that the SPAC market is crowded. There are over 400 SPACs looking for companies to take public. A lot of high-profile names are jumping in as investors, but not every SPAC has a management team that offers a combination of financial, operational expertise that we bring to the table. So we believe that based off of the proprietary pipeline that we've developed, that we'll be talking to companies day one and hopefully be announcing a combination fairly soon.
We'll look forward to it. I'm really curious to see the companies that you guys have on your radar. Hey, just one last quick question. Just got about 30 seconds. All of you who are involved, are all of you investing in the fund, or how is it?
Absolutely.
You are.
Every one of our advisors are also investors, and that's it's just great to see women to be able to participate in economically as well.
Agreed. Looking forward to hearing more, and especially where you guys ultimately place those investments. Phyllis, thank you so much. Good luck. Phyllis Newhouse, CEO and co-founder of Athena Technology Acquisition Corp., joining us on the phone in New York City. All right, you're listening to Bloomberg Business Week. Coming up, we're going to wrap up the week with a former pro football player for the NFL, but is also really turning his sights on investments, but also helping out others. So we'll get to that in just a moment. First up, though, back to World and National News and Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Senior U.S. officials say there is still work to do to patch over relationships with China. The two nations just wrapped up their first high-level direct talks since President Biden took office. Secretary of State Tony Blinken says the U.S. accomplished its two main goals.
We wanted to share with them the significant concerns that we have about a number of the actions that China's taken and the behavior it's exhibiting, concerns shared by our allies and partners. And we did that. We also wanted to lay out very clearly our own policies, priorities, and worldview, and we did that too.
Blinken says he confronted China on human rights and the erosion of democratic freedoms in Hong Kong. He says they did find common ground on issues like North Korea, Iran, Afghanistan, and climate change. The Centers for Disease Control now says it's okay for kids in elementary school to sit only 3 feet apart in class if they wear masks, but adults should still remain 6 feet away.
CDC Director Rochelle Walensky says the revised recommendation is based on studies in several states.
The evidence shows that the risk of COVID-19 transmission among younger children is much lower than it is among teenagers and adults. When young children are masked, the distance of 3 feet is in fact safe for adults, and for older children, children. We're continuing with the 6-foot guidance.
Dr. Walensky said 3 feet distancing is doable in middle and high schools in communities with a low level of disease, and 6 feet should remain the standard in common areas of all schools. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Okay, guys, I decided to close my Japanese yen pair, so I'm going to place a stop on profit. So if you want to close it, I don't want to hold it overnight and especially over the weekend. So I'm closing at, I'm placing an order to sell, let me all see, 919, 108, 9, 902. Actually, no, 108, 903. Okay, I'm placing an order at 108, 903. This is stop on profit. Okay, so you guys, if you follow this trade, if you want to end up this week without any positions on Japanese yen, what you did today, we still hold short positions, but these short positions, broker pays us overnight charges. I don't want to hold long position because we have to pay for overnight and especially over the weekend. It's a couple of days prices. So you need to place stop on profit. Okay, I'll speak to you later.
Consulting firm for the last 8 years since I retired. I've been really just trying to use my love of the medical field to help doctors and their patients. And so everything from PPE to testing to try and just finding resources for those who need them the most.
What are you hearing, too, in terms of the Black community in the Atlanta area and other minorities in terms of stepping up and being comfortable with taking the vaccine?
That's an interesting one because I'll be honest with you, even me personally, I've been on the fence for a long time, but I'm definitely leaning towards getting the vaccine just because having a face-to-face conversation with people who've had COVID and have told me, like dear friends of mine, their experiences going through it, it's to the point where as much of unfortunate hesitation there is in the African community, and that I have as well, whatever symptoms I could have from the vaccine isn't worse.
You know what? Actually cancel order. You need to cancel this order. Oops, it's too late. Okay, we sold short, we sold position at 108.899. So if you already placed an order, it's already was filled. So we still haven't end up with a profit. So well done, good guys, good for you. In our case, we made not much, but at least over the weekend we will not hold long position. Okay, I'll have a nice weekend. I'll speak to you later. Yes, stay safe.
And so the model that we were using is, really unique, and I'm surprised that more people haven't used it. I think that we have a high-end European device. It's floor to waist high, stainless steel, laser etched, powder coated, fully customizable, and it allows our partners, our clients, to make their customers feel comfortable going to a stand. And I won't name any names, but some of the leaders in the sanitizer market, you look at their stands and they look kind of janky and kind of a rundown, and they're full. Ours has a sensor to where anyone can see which one of their dispensers is full, needs to be refilled, and so on and so forth. But we took it to the next level and have added a sponsorship model where with some of our clients like St. Regis or Google or Penn State, or some of the other wonderful clients we're working with, we'll find a sponsor that can go there and actually pay to have their logo and their insignia, and even there's a QR code that could be on there to get their information out there. Quick example, Penn State has Target as a sponsor, and rather than Penn State having their sanitizer being expensed, now Target, who gets more than enough, coverage from being on these dispensers, has a QR code that gives percentages off to get some of their students to go to Target. They're making money, Penn State's making money, and we're doing well because part of the proceeds goes to our nonprofit.
That's really terrific. And I know you're doing stuff with B of A, Cox Communications, you mentioned Penn State, Delta, U.S. Bank, and you said the money goes to your foundation. I mean, talk to us about where that money then ultimately goes.
Yeah, so we've been really on the forefront. Very proud to say I'm the first NFL player to have a fully environmental foundation back in 2008 when it wasn't even, in to talk about the environment. People looked at me like I was crazy. I said, hey, guys, stop talking about the environment. They're like, why? Black people don't do the environment. Athletes don't do the environment. I said, yes, we do, because I'm here. And my biggest thing was just trying to use my platform to educate and inspire the next generation of environmental leaders. I wanted to bring more diversity and inclusion into the green space because that's the only way we're going to solve this problem. And so the money is going for our comic books. Our second edition of Gridiron Green is coming out, and we have a curriculum that goes along with that. We call it a Sustainability STEM curriculum, where we focus on the science, technology, engineering, and math in the sustainability space. Because there are so many green jobs out there, but very few people in urban areas or black and brown people are vying, or not enough, are vying for these green jobs because they don't know about it. They don't know about the opportunity to do good and do well. They're not exposed to it on a daily basis like other parts of the country is. So we want to use my influence as an athlete and also entertainment and just fun to really expose people with some of the great ways that you can be part of the solution.
Right. It's not just about opening doors. You're actually providing doors. Ovi, what I loved about when we talked over a year ago, but I'm even thinking about as we're talking now, you're someone who's accomplished a lot and succeeded and done very well. But this past year has exposed that not everybody has the same opportunities. And in particular, if you're Black in America, it's very difficult. And you have a different set of doors that are opened or not open to you than a lot of other individuals and a lot of white Americans here. What's the smart conversations that we need to be having? What are the conversations you've been having with, people that Black, white, or other, that you think will help move this all forward and to a better place?
Absolutely, because you can't have any conversations about moving forward as a people until we discuss, racism, because it's always there. It hasn't gone away. It's just become more prevalent in the last couple of years against all races, but especially, with African Americans. And so what we're doing is trying to just educate people, because it's hard to do better if you don't know better. It's really hard. It's just like, we always said in football, if you know better, do better. Same thing applies in life and towards racism. I had a really interesting conversation with a high school friend of mine, Scott, just yesterday, where we hadn't spoken in a long time, and he went out of his way to ask me, how are you doing? He's a Caucasian, a white gentleman, and he was like, how are you doing with everything that's gone on in the last year with race? And I said, wow, no one's asked me that. No one. None of my white friends have just said, like, how are you doing? Are you okay? How, what can I do to help? And it took me aback, but I was really impressed and appreciative that he asked that. And I gave him some really simple answers. I was like, those who want to be an ally to people of color, and especially African Americans, they just have to speak up. And you have to do everything. No one can solve this in a snap of the finger or with one act, but it's the accumulation of more people who aren't as oppressed and who don't have some of these uphill hills to climb and can easily call somebody out or make a point to uplift someone who should be in a certain position because they know that, hey, my job is safe. I can speak out. some other people will be able to speak out or say their truth because their color, they have to just keep quiet and do what they're doing. So to answer your question, it's really about getting more white people to help really enforce where we're going with this and how we're trying to move forward. Because I've been very blessed to have some great friends, and when they reached out and asked how they could help, and I gave them solutions, they've actually taken advantage of it, and they've done it. So that helps out a lot.
Well, and it's interesting, Ovi, too, and I'm thinking what you just said, it's just kind of really staying with me. And I do wonder, though, your experience in the NFL, and I'm not looking for you to be critical or anything like that, but I do wonder, I feel like the NFL itself, there's been some enlightenment, perhaps, or some better understanding. I think of Colin Kaepernick and how much criticism he came under, initially, and how that has evolved. What are your thoughts on that?
My thoughts are that it's interesting, and my wife always has cautioned me not to be too honest, but I'll be flatly honest. They messed up. They messed up in a big way. They messed up, and I think they were trying to just say whatever they thought people wanted to hear. And the truth of the matter, or the matter of the fact, is that he was absolutely right, and there is inequality, and there's a lot of racism that needs to be rooted out. And bringing attention to that, no matter how you do it, especially if you're not hurting anyone, is not a bad thing. So to come around and say, yeah, are bad, but to not really take full responsibility, I don't agree with that. But I do appreciate the fact that they eventually did come around, and they're trying to now put more systems in place to try and fix this, because there's a lot that needs to be done. And nothing against the other sports, but the NFL is king in the U.S. And NFL players and the NFL league can do so much with its voice and with its power with its players. But the players shouldn't feel like I can't speak out, or I can't go this far, or else I'm going to be blackballed or not accepted by the leagues. But now Roger Goodell is opened things up, and I think that it's going to play a huge part in really helping to change things.
Did you ever feel like you couldn't speak out?
It not per se. I'd say with the environmental movement, when I came to different people of power, it was just pushed off as, we're not focusing on that right now. That's not as important, and we'll get to that later. Back in 2008, 2009, when I was still playing, but now obviously it's at the forefront. So I think that it's really important for athletes, and I don't know if my professional athletes are listening, but you just got to get creative in how you reach out to help those as you want to help. When one door is closed, you can't say, all right, I guess this is not for me, it's not going to work. You got to keep on trying, keep on knocking on doors, and that's what we did. That's how we were able to get our initial sponsors for our Green Football Camp, or our Green Speaker Series, or our comic book, and some of the partnerships that we've made with some of our other environmental nonprofits.
I love your involvement in green, and I know we had talked about this, last year. Do you, in terms of the conversations you're having when it comes to sustainability and green, that too you feel like is making progress?
Oh, absolutely. The sustainability conversation, it took off. The last couple of years, it's been so exciting to see, rappers and actors and singers and other celebrities who are all finding unique ways to become a part of it. And it's such a strong business play there, where people can do the right thing and make money from it. Like the Astria hand sanitizer model is working up. Like we're having stadiums where, like, we're talking to the Dodgers, of course, the Falcons, several other soccer stadiums, and these stadiums have the ability to bring hundreds of thousands of dollars into their business and reduce their carbon footprint, and it didn't cost them a thing.
Right.
So we're having some really exciting conversations. We also have a product where clean air is more important now than ever, and we work with a NASA-endorsed product that has been, not we think, but we hope, proven at the University of Texas, their hazardous waste lab, proven through a study to kill 99% of COVID in the air and on surfaces. And so it's called Valera, Air and Surface Pure. Our nonprofit partner with them as well. And it's been exciting to get this into a lot of sports locations, into locker rooms, into gyms. Or the state of Louisiana just bought several from us for their public schools.
Right.
And so it's really, again, using your platform and the business background I have to partner with companies that are aligned with helping the environment, helping people, and trying to do good.
Hey, just very quickly, 20 seconds, 30 seconds, the NFL, that exclusive big TV broadcast contract, and then Amazon. How are you going to watch games? Is it traditional broadcast or streaming going forward?
I'm always on the move, so I think I'm going with everyone else. Streaming is the way to go.
All right, good stuff. Ovi, so nice to catch up with you. Be sure to stay in touch. Ovi Muhaley, he is, of course, former NFL Pro Bowler, was a fullback with the Atlanta Falcons, and he's president and founder of the Ovi Muhaley Foundation, joining us on the phone in Atlanta. All right, coming up is Sound On with Kevin Cirilli, and I'm just kind of guessing, a little birdie telling me that you might be hearing from the president during your broadcast.
Yes, the president of the United States, Joseph Biden, is speaking at Emory University, and we are carefully monitoring those remarks, and we'll carry them and we'll dip into them, Carol. But just a fascinating week on the geopolitical front. And we're going to have Keith Kroc on the program. He's the former Undersecretary of State to talk about this. He's got a new column out in Newsweek on the talks this week. It's just really been a crucial week.
I mean, listen, just between U.S. and China alone, some of the optics on that was just remarkable.
Really just remarkable. And I would just even go one step further and just say, I think the Europeans are going to now come even more into focus after such a testy week on the geopolitical front. Now, for next week, we have to be watching to see how European counterparts, what are their chess moves in this, and how do they align?
That's a really good thing. All right, well, listen, I'm going to pass it over to you, kiddo. Have a good weekend.
Thank
have a
you,
great
Carol.
show before that. Kevin
Thank
Cirilli.
you, I appreciate it.
Take it away.
My name is Kevin Cirilli. I'm the Chief Washington Correspondent for Bloomberg Television and for Bloomberg Radio. As I was just talking about with Carol Massar, the big story remains geopolitics as we await remarks from President Joe Biden speaking later this hour at